I won't slow down, building my empire in this buzzing town, casting my vision on the silver screen, my funded life, a vivid sheen, my funded futures light the way.
Good morning, traders. Welcome to MyFundedFutures, MyFunded TV. I am Terry Trades 100, and we have our expert traders, Bull, Barbie, and Nick Does Futures. Good morning. Good morning, chat. How are you guys today?
Doing pretty well. How about you?
Morning.
Good. It is Wednesday. You know what that means.
What does that mean?
Barbie, what does that mean?
We can't hold it any
It means
longer.
good morning to the lovers and the haters.
Yeah, it's hump day.
There it is. I wanted her to say it. She's the one that likes. She's the one that's into celebrating hump day. Let's let her have it.
Let's go. Good morning, everyone. Good morning, Abhishek, Denny, Jamie, Transparency Trades. Let's go. Who would like to go first this morning? Nick or Barbie?
I'll go first. I don't have
Thanks,
a whole lot
Nick.
to cover here, but I'll go over it. Let's see. All right. So first thing I'm gonna do is I'm gonna go ahead and break down my trade I had from yesterday. Barbie was getting on to me yesterday because she was like, "There's no way you can short, right? Like, there's no way you go short." I went short yesterday. Okay.
Yay!
Yeah.
Buy a switch.
Yeah, I switched up a little bit, and that's okay. If things become clearer, it's not good to just keep switching every time you see like a green candle and a red candle, all this other stuff. So, post news or right at news, I saw that we had this 4-hour gap, which we're still currently trading inside of right now. Let me just back it up. Make this bigger. So as you guys know, I was watching this 4-hour fair value gap for us to go higher. Devil's advocate, though, was that we could go lower down here before going higher the rest of the week. But it just wanted to rebalance some of these inefficiencies from Monday night or Monday. So right at news, I noticed that we had, some volatility coming into the market, obviously. And we had some nice displacement here through this candle right here. And it looks a little bit different on micros compared to minis. Never really got that close below on minis compared to micros. It just looks a little bit better. So right here on this candle close at 10:15, I sold down to right around in here. And it got down there pretty quick. It was a very nice trade, and I was in and out by 10:45. So yeah, no, that was trading. I think like eight funded accounts. I think I'm doing pretty well so far this month trading. Just trying to take it slow because typically August is like the last summer month, really, before heading into the fall. So I feel like this month has just been slow in years past. So just gonna, be very cautious of everything, and not a whole lot of news either. So just trying to take advantage of the moves when they happen. So yeah, this was the trade here, targeting down to here. I was just anticipating us to go lower to then go higher the rest of the week. So let's talk about today and moving forward for the rest of the week. We're right around that same area that we sold off from yesterday, that we sold into yesterday. So that is this 4-hour gap, which is what I'll be watching for us to go higher from. I'm not really looking at shorts in here, to be honest with you guys. I'd like for us to just push higher from here. Yeah, so let's see, mark off these gaps, mark off this gap. I think a good target, obviously, is that previous day high up here for us to get up into. And then, so this is going to be my draw for the session for the day. And if you drop down to the 1 hour chart, there is a little bit kind of my model here on the hourly time frame. So we have a move up before the move down. These series of green candles becomes my breaker. So if you guys that swing trade are willing to hold positions for a couple hours or so, this would be something I'd like. Target up to right around in here. I think this would be a good play. Maybe to just throw on 1 or 2 micros for there. But yeah, so I'm leaning bullish for the day. Got some gaps in here to work from. If we get below this Asia low, I'd be hands off, just kind of like, okay, I don't know what's going to happen, and just wait for a daily candle to confirm that we're going to go down to Friday's low, which I don't think is going to happen. I think we're going to go higher. As we look at the daily chart, got to get out of this consolidation. We don't want this to turn into consolidation here. So last but not least, let me check the Forex Factory. I don't think we have any news no, we have news tomorrow at 8:30. I think we have bond auction today at 1 o'clock and tomorrow at 1 o'clock. And then crude oil at 10:30 today. So if you guys have traded crude oil, wait for the news at 10:30. And that should be a good volatility driver for that. But yeah, bullish on indices. I have to figure out which accounts I'm trading today, but it'll be right around the same. No news days. I try to scale back. I'll trade the same amount of accounts, but I'll size down the risk and be very selective with the setup. But yeah, that's pretty much it for me. If you guys have questions, drop them in the chat. I use Asia as 20, not 1800.
Thanks, Nick. Nice trade yesterday in 8 accounts.
Something like that. Yeah.
Woohoo! Everyone, type in W for Nick. Let's go.
W for Nick.
Let's go. Barbie, what are your thoughts today?
Kind of the same as Nick, where I'm like a little bit annoyed because it looks like it's wanting to be slow and choppy, which is typical for August. I'm not going to put that bias on the market. I'm going to let it be free to do what it wants to do. If it wants to do something exciting, okay, market. Okay. I could show y'all what I ended up trading off of the stream yesterday too, because I'm on the NASDAQ one and I was trading ES. Let me go to this one. I had a loss yesterday that I then recovered with some wins. I'll show you. This is very messy, but this is the chart I was using. So I bought 63.33. I thought this was a pretty decent little spot, even though things were really ugly. So I had to stop out of that one. But then when we got back down here to this support, I've been really, really watching this zone kind of from 63.10 up to 63.17. I've bought the heck out of this level. And I don't know why I just could not get my head. I was in the orb short, but I just didn't see a kind of like discretionary short here. Maybe I saw it and I was just bull barbing out. I was like, we got to go. It's bull mode, right? It's always bull mode. I don't know. But I didn't get in the short, tried to bounce it down here, failed. But I tried again down here and I liked it a lot better because the candles were slowing down too. This is the 15-minute. I was watching the 5, but you could still see this slowdown. So I bought this and I took profit, and I bought it again and took profit. And that is when I was around the time I was harassing Tom on stream, like they're talking about. But we'll zoom out a little bit and look at what else is going on. So this is that stupid box, and look, we're back like in the stupid box area. And the reason I don't like this area of trading is it's an area of consolidation, and I love breakout trades. We're not going to be getting breakout trades, or they're not going to be as likely when we're inside of a really choppy consolidation area. And the reason that these areas become like the old areas of consolidation can still be areas of consolidation because people are looking left. Big funds are looking left. They're zooming out to higher time frames and looking left and seeing where the support is. So we're going to have a lot of orders in this area, whether they're trying to exit or enter. This is just kind of the good spot because remember, the big money can't just hit market in and get $1 million of ES shares or whatever. They've got to spread it out over time and price. And that's where the names like block orders and stuff come from. So kind of taking that into consideration. So I know that yesterday looked really, really, really bearish, but I wanted to pull out the hourly because yes, this was really bearish. And then we had this drifting move up on Monday, and then Tuesday looked really bearish again with this candle. But we're actually still like possibly in an uptrend here a little bit. So it was like downtrend, uptrend. So this is another reason like it's really hard to form a really strong bias when things are like this. That's okay. We can still work with it. But basically, I'll put my levels back on here. We'll zoom in a little bit so we can look at more today. Oops, what did I just move? This is that area that when I was zoomed out on the other charts can be just, well, the area that I'm worried about being really, really choppy today is this kind of same area between 63.17 and 63.50. This is kind of on high watch. We could end up kind of forming a little range like we did yesterday, but you have to be patient for those. You have to wait for that range to kind of present itself before you can trade it. That's why I was doing that more during like Tom's session. But the kind of most likely area is just within yesterday's price action, really. If we're going to be choppy, you'll hear traders talk about inside days and outside days. I think that comes from market profile. Is that market profile or volume profile? It's one of those. But when we're in a slower month like August, we have to be real cautious about having an inside day, which just means we stay inside of the previous day's price action. We did dip below already in pre-market, so it wouldn't be a true inside day, but I do kind of look for us to kind of chop around in the same areas. So if we're going to break out, we're going to break out of those areas. So that's going to be really to know that we're clear of 63.50 would really be around this high from pre-market, which I didn't mark, but it's around 63.58 or so. In my brain, I'm just thinking 63.60. So it's like once we get over 63.60, it could get a little choppy through the 60s up here, but I would look to challenge that high from Tuesday's little pre-market rally into this. This is it was support and now resistance zone up here around 63.75. And then like up here is where we could start triggering some stops and get something exciting. I don't know if the market has that in there or not, but the way I look at this is like these are the different scenarios where I can turn bullish and be looking for some bullish breakout trades, and that point's up here. So then lower, kind of the same framing of if we're most likely to be choppy inside of this area where we were inside of basically yesterday's price action, it's when we dip below that I'm going to be getting more bearish. And well, apparently I don't like bearish trades this week. We'll see if I can get one in. But this would be losing this zone here. This is a higher time frame support. So if we lose this zone, that could get ugly and really start dragging us down to tag some of these lower levels. So if we lose this area around 63.09, 63.10, the next obvious level to target 6,300. 62.90, 62.85. It starts getting really congested just because we've been trading around here recently, but we could definitely get some ugly moves down from there too. We could also end up in chop. So I guess to kind of wrap up that whole thought, I'm very cautious of chop, and so I'm going to be. I actually already scaled down my orb trade because that is a breakout trade. So I scaled that one down today, just thinking like we might be kind of choppy today, but we'll see. I'm still going to get in on it. Real quick on news. And I expanded this out to yellow folder because the red folder, it's PMI from yesterday and unemployment tomorrow. But I just wanted y'all to be aware that the afternoon could get kind of crazy. And we do have the crude inventories and the 10-year auction, be aware at 10:30 and 1 o'clock. But then we start getting FOMC members speaking, and I'm not real concerned about Collins and Cook and Daly so much. But the other thing that I always check the president's schedule too, and these 9 a.m. events are pretty normal. This one's not necessarily normal here. 4:30, it says the president is going to make an announcement in the Oval Office. So if you are going to be playing after hours or swinging, be aware of that. I don't totally know what that's about yet. So
thanks for giving us that heads up.
Yeah, who knows what that's about?
You never know.
Surprise. It is a surprise. Everyone, speaking of surprises, smash that like button. Let's get those numbers up so My Funded Futures will give us a great surprise. What should we set the bounty at? Yesterday we did 800, right? I think we did 800.
We could do I won't say anything today. I'll let it's y'all's hump day. Y'all like hump day, so I'll let y'all this is y'all's day.
What about 820? What do you think of 820, chat? Ooh, I'm seeing 900, 888.
I keep saying 969.
For hump day. Let's go.
Makes sense.
1,000. Voltron says 1,000. 1K. 888. Yeah, I'm seeing a few of those. Sire says 888 also. All right, let's go with 888. Barbie, are you down? 888.
Let's
Nick?
do it. 6969 is another good option, but we can go with the
a little too low.
888.
It's a little too low.
A little too low?
Yeah.
Uh-oh. What are you thinking, Nick?
Oh no. I like 8. Well, whatever y'all said for 8. I thought y'all were
Okay.
just talking about 69. I'm like, that's too low.
Oh, okay.
No, it was
I was
no, it
like,
was 6969. I liked that one.
Oh, 6969. Okay. Yeah, well,
That's a good number too.
It is. One day we'll be
Maybe
able to set
869.
that.
How about that?
Wait, I thought we were going 888.
888. Let's do it. Run it.
Let's do it. Okay.
888.
Bounty set 888. Let's go, guys. You know the drill. Share the show on all of your socials. Smash that like button if you have not already subscribed. Make sure you hit the subscribe. We're almost at 19,000. Only 200 more. Market is going to open in about 11 minutes. NQ is green by 55 points and ES is green by 16 points. We are trading above VWAP on the NQ.
Did you take any trades yesterday, Terry? How's no till August doing? I saw you at the golf course yesterday. How's it going?
It's going great. Yes, I think doing it with the community definitely helps, makes it more fun. So I took the trades on our show, and then I just shut everything down, made sure I was flat on everything, and then I got a few things done that I needed to get done, and I went on the treadmill, and then I went to the driving range and practiced a little bit. I'm just trying to get back into golf, just a little bit. Yeah, it's going well. It was relaxing, and to not like constantly think about the market and to be away from the charts. But yeah, I think that's key. And both of you guys have shared that, like, okay, plan something after your trading window, like go do other things. I think the best traders aren't typically trading all day long. That's what I've noticed. Yeah, thanks for asking.
I think no matter what you're doing, you always have to have perspective. It's really, really easy to lose perspective when we're really focused and doing what we need to do, but it's important to get that no matter what you're doing, honestly. So
yeah. That perspective and like zooming out.
I know you're obsessed, but
it is good to have balance.
yeah.
And we've talked about that on our show with like having hobbies outside of trading, just to give you that balance and that perspective. Chat, what are some of your hobbies?
Yeah, you got to have a hobby. You can't the more you make trading about yourself, the more you make everything you do like trading related, like it's just so you're going to have such an up and down life. You know what I mean? Like you're going to be like the lows are going to be really low. The highs are going to be really high. You're never going to have no equilibrium. It's just going to be like this ping pong ball of emotion. So you just got to have you got to put trading on the back burner. And what I mean by that is just like put it over there. You trade it for 2 hours a day. You don't let it affect you too much, and you just walk away. That's the best way to do it.
We all have a reason to trade, right? Like, what are you going to go do with your FU money? Go get started.
Yeah.
I love that.
100%.
The FU money. If people aren't familiar, the FU money is oh, I don't care. I have a ton of money. I can do whatever I want. I can quit this job.
It's eval money. It's eval money.
Yeah. Let's see. Some of the hobbies I see. Pigeon said art, listening to music, or watching Netflix. Marco said gym and video games. Kane says motorcycle.
I have been playing a lot of video games here lately. Okay, so I've been playing a lot of college football, a lot of Madden. I don't know if Madden's came out yet. I don't think it has, but yeah. So
I see
Yeah.
Voltron likes to go to the shooting range. That's a good one too. Although lately, the problem is like cats show up and then they end up in my house. I don't have a barn cat. So I am the barn cat. That's my shooting range. I go put the horses in the pasture and go after the rats. That's a good hobby too.
That, like, you must be a sharpshooter because
I'm
I
a
feel
really
like that
good
would be
shot. I'm not
hard.
gonna lie.
Yeah.
My record is 3 with 1 shot.
Holy smokes. That's really cool.
Don't miss.
That's that MW2 collateral. That's like stuff you used to see at Rust. If I get you guys.
Well,
don't know.
I don't like you've seen the sports where you're running on a horse and have to hit targets. I've been wanting to get into that too. That looks fun.
Pine Tree Traders in the house. Good morning. Oh, Mr. Smith said 3 cats?
Oh, if you guys don't know what Rust is, come on now. That's where you used to like duke it out with your buddies. Like when you guys had beef, you took it to Rust. You took it to the just Google Rust. Here, let's Google Rust real quick.
That's so
Rust?
interesting. I've
Open
never heard
dictionary.
of that. Yeah.
Oh well.
Rust.
Rust dictionary.
This is like meet me out back.
Yeah, this
then-
is like the meet me out back. Just okay. You have to Google Rust MW2. Yeah, and it pops right up. That's where we used to. Yeah.
It's a little bit different over here. They're like, I don't have a treadmill, but the other day, these knuckleheads, because it's summertime, they got both the riding lawnmower and the golf cart stuck. And this is so unrelatable. What am I talking about? They got it stuck on the volleyball court. I had to go get 2 vehicles unstuck from sand.
Oh man.
So that was my workout. They got both the lawnmower and my golf cart. It's my ranch cart. Stuck.
How'd you do that to get them unstuck with like a big truck? I don't even know.
Well, I got the golf cart out by because it's lighter, so I got the back end lifted out and kind of got some boards underneath and then got it out. Haven't you ever seen My Cousin Vinny when they get stuck in that Alabama mud? It's like that clay stuff. Like these are just skills you have when you grow up a certain way. So yeah, I got the boards underneath there and got the golf cart unstuck. And then I went and got my tow rope out of my truck. But instead of getting my truck, I just used the golf cart to winch the lawnmower out.
Nice.
So these are the shenanigans going on around here. Y'all are wondering, like, why isn't Barbie trading right now? Because I'm getting stuff unstuck.
Yeah, we're talking about mud here on MyFundedFutures 5 minutes before the open.
Ash is in the house. Good morning, Ash.
It's a redneck engineering. You either know it or you don't a little bit.
Yeah.
Market's going to open in about 5 minutes. So I'm short 5 micros. This is like a half port. Someone asked me if I'm going to full port Wednesday. And I said half port. I think you asked me that. Yeah, so this is half port. It's just short 5 micros. And then here, I'll put it back on the MNQ chart. So my stop is above the high overnight, and then I'm targeting the lows. We'll see what happens. I'm just, you get impatient with these evals sometimes. Half port. Abhishek says half port. Thanks.
Market
no luck.
Says you're gonna dump the market again.
Yeah. Yep. Exactly. with my eval, my sim eval here. Watch out, guys. I might come after your stops.
Yeah. Remember, whales get perfect fills.
Always.
Yes.
Yeah,
always.
They never have to average in.
No, yeah, marketing. I'm marketing because I'm a whale, man. I move the market. Kidding, everyone.
We got some gold traders in here too. Looks like they were. If you were short on gold from the gold open, you had a nice day.
Is gold
Nice.
finally starting to do something worthwhile? Let's
I
see.
don't know about that. It's still chopping on the hourly, but you can play those hourly ranges on it a little bit. That's kind
Yeah,
of what I'm looking at possibly doing on the indexes today. So
yeah, the daily looks like crap. Oil doesn't really look good to me either. What was the other one we were looking at the other day? HG or something? Copper?
yeah, for copper,
Okay, daily.
KIJ says he funded his eval with gold. So nice.
Oh, I think Mr. Smith is trading copper.
Yeah,
The
someone
thing
wants me to
about
look at gold.
copper's been really news driven lately. So that's why they're having fun on that one. It's like, why are we
Yeah.
talking about copper? Because of news.
Hmm.
Here's kind of what I think on gold, Stephen. We have this gap here. On the daily time frame, as you can see, the daily and the weekly look very choppy. You're just gonna have to play these ranges until we get out of the range, or not trade it, which is what I'm doing. So I'd be watching the hourly chart. Man, this is a big level, big spot that gold's in right now. Support here. You got a gap here too, but I wouldn't be too confident of that holding. We'll know here in about an hour, but 30 minutes. So I would wait until 10 o'clock, wait for this to prove something to you. If we close above, like somewhere in here, I think you can use that to target these equal highs right up here. But the one thing I don't like about gold, and this is how I bounce from pair to pair, or this is if you guys want to trade, like go to pair to pair, this is how I do it. So if you look at the hourly chart, let's just go back to July 16th. You're going long in here. The next week you're looking for a retracement, and it keeps failing, and then it goes lower. I'm not saying you can't trade these. Like for you guys that trade the lower time frames, you guys are probably making a lot of money in here. But for me, trading like the hourly, the M5, it just doesn't work out. And if you look at it, there's not really a whole lot of retracements. It just like shoots up, consolidates, shoots up. So not really a whole lot of time. And a lot of times I've come into the market for gold and it's already accomplished the move that I wanted to happen. So it's been kind of frustrating trading it. And then the daily, just like I said, ever since April, the tariff news came out, hasn't really looked the cleanest. Whereas back in like
Oh, market's open. Sorry, Nick.
oh yeah, go ahead.
Oh, no. Like, I just wanted to say, market's open. All right. Sorry
Yeah,
for interrupting.
gold since like December was very, very nice. Like it was going higher, retracing, going higher, retracing. Like these were very good moves to be a part of. Whereas now, it hasn't really moved a whole lot in there. But yeah, let me go back to indices real quick since we're open. Let's see. This 4-hour gap is something I'm watching. The hourly. Asia's down here. Asia's right down here. So we could reach for Asia lows.
Let's
And
go.
create a SMT before going higher. So we'll see what happens.
I'm seeing the lack of agreement on the first candle again. So
Yesterday was tricky. I thought it was tricky.
I had a much easier time. Well, I guess I did trade a lot of the open actually, but I had kind of an easier time easing into it a little bit later. And that happened the other day too.
Market is figuring.
See,
Ooh,
yeah.
look at that. Ooh, it just pushed up. Oh my goodness, it's pushing up hard. This first 5-minute candle, it's kind of wild.
Yeah, I'm not getting involved in this one. This one can settle down first.
Yep. Dummy FX that's Terry about to get stopped out is very possible. And that is a good thing. Why I have a stop, because you never know. I have definitely lost funded accounts before, like because I didn't have a stop. And literally before I could even blink my eyes, like I think I had like 5 funded at the time, and they were all looking pretty good. And I was trading overnight, and market typically doesn't move very much, like at 10 p.m. my time. And I had to trade on, and before I could even blink my eyes, like the market had a huge spike, and I lost all the accounts all at once, like before I could even realize what was happening. Right. So after that, that was the major loss I've had with funded accounts without stops in. And I learned my lesson on that one, because sometimes it takes a few times when you're, and then finally you might have one that really hurts, and then you're like, okay, I will always trade with stops. So that is a lesson that you can learn from my experience, guys.
Denny, I want to congratulate Denny, not just on the baby that's coming. We're still on baby watch. Okay. But Denny passed a new scale account and also a payout. So yes, go MyFundedFutures family.
Woohoo!
But yeah,
Every-
you should use stops on futures, y'all.
yeah. W for Denny, you guys. Let's
I will
go.
get away with not using them on options, but we know where the options can go. We know where zero is. On futures, you don't necessarily know where zero is. Like Terry was talking about half port. Well, what is half your port? You know, if you're trading options, if you have a $10,000 account, half of it's $5,000. It's a little bit different when you're using futures leverage. But oh no,
Yeah, Denny, good luck, buddy.
gonna-
All that money you're gonna get on the payout is gonna go towards diapers, you know, a
well, this is
bed.
number 3. He knows the drill.
Okay.
Oh,
Yeah.
wow. Denny said doctor's appointment this afternoon to find out if she is getting induced, since water
Yeah.
hasn't broke yet.
Maybe we're gonna get a date. Although babies decide when they're coming. Even if you schedule a date, they're like, nah, bruh, I'm doing my own thing.
Nick, on the
don't
1
care.
hour, NQ going one way and ES going the other way. Your thoughts? Great question. That means my thought is to just stay out. If the one chart is going the other, like if indices are supposed to be moving together and one of them's going one way, the other one's going the other way, just back off. I'm not touching this, you know.
Yeah.
Let's see.
I know we all want to hit the first candle when it opens. It's just not always the one.
NASDAQ is green by 87 points. ES is green by about 13 points. First candle is a big push green. Let's see. Oh, okay. Second candle is also pushing green. 5-minute order, people. If you're taking this, then you're tagged in long. Anything can happen, guys. Abhishek said most of the days NQ pushing higher at open. Buyers, they have been in charge.
I would not be surprised if we just engulf this bullish candle. We just put it on the 5-man, just seek lower. Would be on par for NQ.
Yeah, just put in a barcode right away.
Yeah, literally. Would you consider the 1 hour 1400 as a valid SMT between ES and NQ? Okay, so at 1400, that's 2 o'clock yesterday. Okay, so this one here, and then this one here, this candle. I don't see what I think you're talking about the highs right next to each other. No, I like combining for SMT and divergence. I combine like session lows and highs with time. So like at 9:30 does okay, let's just say at 9:30 ES runs the Asia low and NQ does not. That is a great example of SMT for me. You know, combining time with the session liquidity. And what I mean by session liquidity is just like Asia, London, previous day low, stuff like that. You know, nothing crazy.
Crazy, you guys. The market.
Here's the barcode candle.
Yep. Here's the engulfing. Told you it was coming.
It's coming. So the market took out the overnight high, excuse me, by like 1 point in this candle right here. So the
I'm going
over
to point out that ES did not even make it anywhere near that.
Ooh,
So
that's
I can go to
interesting.
the 15-minute. This is not my. I talk about this a lot lately. This is not my favorite trading environment when one runs a high and the other one doesn't. So
Oh, I misread your question. Yes, 1400 to 4 a.m. this morning. Yes, that's a great example of SMT. Yes, great example of SMT. Thought you were talking about the ones right next to each other. 608 watching. 888.
we've got like ES looking a lot heavier and NASDAQ looking a lot more balanced. But the way that this has happened lately, we've had this a lot at open, and usually just being patient has rewarded me. So it's
Mhm.
very rare that I've missed a move because we have one going one way and one going the other way, and I couldn't figure it out. Usually we'll eventually sync up, and then we'll end up with some sort of level that they can kind of agree on, and that's what I'm more interested in.
Congratulations to Ren, passed another eval from that down candle.
Nice. We got everyone bearish on gold this morning. They want death and gold.
Yeah, I just wait till the hourly closes on gold, see what happens at 10 o'clock.
Yeah, ES has not taken the overnight high. ES made an overnight high and has been moving lower since. So different
Yep.
scenario over there.
Great example of SMT at the highs with NQ and ES. So my thing is, I'm a little worried that instead of it being a divergence, I think it could be potential chop, where you're not always going to see the highs and the lows being ran during choppy conditions. Sometimes you're going to see a lot of SMTs in there, so you just want to watch out. But if you get displacement lower, then obviously that could work out. But we'll see. Asia low could definitely be a target if things wants to get a little crazy. Remember, I was bullish going today yesterday, and I took a very, very nice short. But my limit orders didn't fill me. I need to fix my replicanto yesterday was having some issues. I couldn't get logged in. I finally got logged in, and yeah, I didn't take.
Well, Nick. So like, if you come to the market pre-market, and you got the bullish bias, what makes you switch? Like, what can potentially change your mind? Do you have kind of spots in the market or price action? What are you looking forward to?
Well,
Change?
yesterday it's usually how much conviction I have. Like yesterday, I didn't really have much. It was like 60-40, 55-45 bullish. So it doesn't take a whole lot to change it and go the other way. Whereas like some days where I feel really, really good about bullish, and let's just say it melts it open from 9 to 9:30 to 10, 10:15. I'm just like, whoa, okay, I was dead wrong today. I'll just come back tomorrow or later. So, but one thing I look for is mainly just the levels I plot out and share with you guys. And the more I want to see those get respected, even if it comes down here and goes below this low and NQ does not, and it creates an SMT at the lows and then goes higher, I can still be right. And there's always a difference between being right and being profitable. Yesterday, I was wrong on my analysis coming into the day, but I was still profitable on the day because I was able to flip flop once I got confirmation of shorts. Right, I didn't just short just because it was going lower. I had confirmation that okay, maybe price wants to go lower down to this 4-hour gap, or I'm sorry, this 4-hour gap on NQ, and this would make more sense for us to push higher from here. And we still got targets for the rest of the week. We'll have previous day high, which is Tuesday's high, and then last Thursday's high. So yeah, mainly I just want to see my levels get respected. But if they don't, I want to see them get disrespected very quickly and move towards that the other draw, like maybe like lower or higher.
You're adaptable, basically. Like, if your bullish plan doesn't play out, you're adaptable in switching and not married to that plan. I like that.
Yeah, no, I think that's important. Like right now, I just I could see this going lower here, even though this gap is right here that I would like for price to move higher from, but I could see this going lower here for sure.
You called it, Nick, the engulfing candle.
Yeah, well, that's just typical NQ toxic behavior. That's just like like the X.
Like that NQ toxic behavior.
Yeah.
I might be borrowing that.
Like faking people out.
Well, yeah, faking people. Like NQ just does a good job of faking people out. I think mainly I've been trapped so many times by NQ. I just see it now, compared to in the past. But
that's why people like it, though, is it's the more dramatic sister, right? So it's also the more toxic sister sometimes. There's
Right.
two sides to that sword, right?
Yeah.
Someone put a meme on X a while back, and it was a girl that was like so wild. I think this was based in real life, like an actual ring footage, and she was like pounding on the door, on the window, and she had like barely any clothes on. She just looked very, very extremely upset and like throwing a fit. And then someone wrote, this is NQ, and when can we get married? Like, just super wild. Yeah, it's wild. It goes with you the direction you want, but sometimes it's wild in the way you don't want, and it can really cut you depending on your size.
Yeah, like we all have that, that one friend that is like super toxic that they're super toxic, but you still hang out with them. That's NQ,
Yeah.
And some of you may have like that significant other.
I like the more stable sister. That's just me. Like y'all ask me
people
this
say
all
they
the
like
time.
more
This is really
stable
it.
stuff.
This is it right now. I like the stable sister, not the toxic one. Y'all like the toxic one. That's fine. I'm not judging.
Oh, also, I do have a video come out today on how I trade these. How do I differ these batches up and everything? It's mainly just due on like how I'm feeling for the day. Like if I see A+ setups, I'll trade. I'll risk like one batch that I use just for like 1.5 to 2 hour setups per risk, and then I'll trade like another batch where it's like half risk and just things like that. So that video comes out, it'll be out around like noon. You guys can check that out. Mainly just how to like copy trading is cool and all, but like we were talking about yesterday, if you have like 8, 7, 6 accounts, whatever, batch them up throughout the week or a couple of weeks, and maybe do A+ setups on one, 50/50 setups on the other. And then for me, I have another batch for Fridays. Like Fridays, I like to just trade a completely separate batch of accounts because Fridays I don't really do that well, but I still want to participate if there is a move. I think like last Friday I had a move. 2 Fridays ago, I was able to catch a move, but that way you're at least participating, right? And it can just be 1 account, 2 accounts, whatever. With MyFundedFutures, you get 5, right? So maybe 2, 2, and 1.
Yes, I like that. Like making batches based on the day of the week.
Yeah, no, I mean, I do it on setups because I can usually switch it over pretty quickly, and I trade the 5-minute and up, so I can see the setup sort of forming. I have time to change it based on everything, but and it's usually only like 3 or 4 accounts that you got to change.
So I'm looking at ES right now and at NQ, and Barbie, the calmer sister, is looking much prettier, and NQ is
Prettier, huh?
barcoding. Yeah, much calmer, prettier,
Prettier.
less
like that.
stress. I like it.
No, I mean, obviously I will trade both, but I get asked a lot. Actually, for some reason I get asked why I favor NQ, but I don't. I favor ES. I just like NQ for when I'm going for that more dramatic move, But if I'm going for stability and consistency, Fortunately, they don't seem to care if you play both.
Yes. Ghost says, get NQ down. You must be short, Ghost. Chat, are you long, short, or no trade right now?
No trade for me.
Barbie,
I'll
are
show
you
you one of
flat?
my favorite charts. I still haven't taken a trade either. Wait. Well, I can show it in a minute, but I'm always watching how the VIX relates to the indexes, and right now it's kind of a jumbled up mess on my little line chart. Here it is. I've just like dragged it over top of this other one right now, but the ES is blue, Nasdaq is pink, and VIX is orange. Usually they're like moving apart and then back together, and it's this like nice little pattern. And right now it's just bleh. So this is telling me not to be betting it all on green or red right now.
Or you mean red and black?
Yeah, or red and green, because but this one's pink and blue. I don't know. You know what I mean.
I was talking about the casino. Just throw it all on black, you know.
Yeah.
You have casinos by you?
Well, not in Texas. You have to go offshore, but.
Oh, really? Okay. I thought. Oh, maybe it's Oklahoma. It's Oklahoma, I think. That's
Oklahoma has them, yeah.
Yeah.
Well,
Oh,
the 15-minute orb did trigger, so we'll see how this goes. Well, I thought I had it scaled down. I don't. I should. This should be $300 risk today, so we'll see how this goes.
ooh, we are close to the bounty, guys. Smash that like button. NQ is pushing higher. It is green by about 100 points. ES is green by about 14 points. So the 5-minute orb people would have lost if you jumped in that trade. 15-minute orb is tagged in, and my stop might get hit right about here. It's at 242.
Oh wow, you're still in.
Yeah, I half ported. Good thing I half ported, guys. Good thing I didn't full port. It'll give me another chance on the eval. Half port.
No full ports around here.
No full ports. Not today. Bounty smashed. Awesome job. Everyone hit the confetti button. So we hit the bounty. What that means is MyFundedFutures will release a prize for us. We don't know when, and we don't know what exactly. Usually it's a code drop on the screen or in chat. Sometimes it's like a riddle. Sometimes it's spelled backwards. So everyone pay attention. It's usually 25 to 50 either free accounts or free resets. So you got to be fast.
Yeah, you gotta be quick. For you guys that used to, stay up late waiting for like certain video game drops and shoe drops, you guys would be good for this. You got one screen pulled up. You got Tweet Hunter. Remember Tweet Hunter was big back in the day for automatic. It just like a refresh automatically. So 50,000 expert accounts.
Whoa.
I think you mean pro account.
Oh, you guys, so good. My trade is still in. Anything can happen.
Let's see.
I'm not liking my trade so much, Barbie, because we're on opposite sides.
My thing's just doing its thing.
Keith said subscribe. Ooh, we're almost to 19,000. We added another 100 subscribers. Let's go, guys. Triple smash. Someone told, I used to say double smash, and then someone said, no, Terry, if you say double smash, it unlikes it. I was like, okay, triple. Yeah, I did see AMD was down 6% in pre-market. I believe based on earnings.
Yeah, not good earnings. Let's see. They reported after the bell. They are down from their high yesterday was 180, and they're down at 164. Y'all want to see that one?
Yeah.
Helpful just said 1K on the newly funded for a day. Yeah, good stuff.
Nice.
Raphael said, I hate this open. I hate this open too, but this is why I'm pretty light today. If I do trade, need to see more direction. There's SMT on both sides, the highs and the lows. I just don't really care to participate right now. I don't see anything clear. Pay attention.
it's
Even if
pretty-
you guys don't trade ICT, don't trade fair value gaps, you can still use them, right? Like here, you're getting displacement, and all of a sudden it slows down. Whereas really ever since 8:30, haven't really had any displacement. Like one fair value gap in here. So that means that price isn't moving very much. So
Don't love that.
volume profiles, but these are Barbie ICTs for value gaps.
Guess they're mine.
Chevy asked, can you explain your TP? So I put my stop above pre-market's high. Like I just eyeballed it. So that is why the stop is there. And then I put my target, what is to take out the overnight lows. Oh, let's see here. So this is part of the overnight lows, Globex. I have noticed, not always, but market tends to either take out yesterday's high or yesterday's low. So that's why I'm targeting the lows here. We did take out the overnight highs, not by much though. So this trade isn't looking so good right now, but we'll see what happens.
Yeah, it looks like ES is hovering right around the 9:30 open. So you haven't really missed much if you just tuned into the market, So
Definitely leaning into that chop for now.
Mm-hmm.
It's like Law and Order SVU. If you start watching it season 6, you haven't missed much. You can keep it. You missed 6 seasons, but like you know who Stabler is and all those other people, so you can still figure it out. Still time. That's a GOAT show, right? That's just all time great. Law and Order SVU. Law and Order SVU. It's the one with Benson and Stabler. Yeah.
Yeah, I never really got into those law shows and the mystery on network television shows. What's your favorite?
Is like a mystery. You like the mysteries, like the documentaries and stuff.
Yeah, I do like some of those. I got into survival shows. Have you guys seen the show Alone on Netflix? I think it's on Netflix, or the survival shows, where people are dropped in the middle of the woods with 3 items and then they have to compete for $500,000.
I could see you liking that a lot, yeah.
Right? It's exciting. So I was stopped out, guys.
Here we go.
Let's see.
Is NASDAQ going to? I was looking at ES. NASDAQ starting to.
So NQ came lower. There is a SMT at the lows.
Yes, Tom said Naked and Afraid is a brilliant survival show. That is actually the first survival show I got into. Have you guys heard of Naked and Afraid? It's
what?
Have you heard of the show Naked and Afraid?
Nope.
So this show, they literally drop 2 people, usually it's a man and a woman, 100% naked in the middle of nowhere. Sometimes it's a desert, sometimes it's in a tropical forest, and they're only allowed 3 items. That's it. And then you have to survive and see if you can survive. I don't know if it's 30 days or what.
That's a good yeah, Helpful said that's how I wake up every time I drink. That's a good one.
That's how I feel after I trade NQ and it hits all my stops and all my accounts.
Let's see. I don't see much. I have seen days where it's failed to displace create gaps, and all of a sudden it's like 1 or 2 candles that just shoot higher. I have a feeling that could be something we see today. I just don't see much right now. It's running lows, running highs. So be interested to see if we just seek lower now that we ran those 930 highs on NQ and ES. If it is, that's a great example of being able to identify choppy conditions when it just fails to go to one side. It'll wick up, take a high, go lower, wick that low, come back on the range. So, which looks like we're getting that right now. So if you can just stay away from those days, those are very, very helpful in terms of keeping you money. Because say you don't go down 1R like most people would have, you wait for A+ setup tomorrow during news, you take that, you're up 2R, 3R, whatever it is, and then you're going into the last half of the week, Thursday, Friday, just trying to maintain capital, but or keep your risk small while trying to grow it. So maybe you just risk half R to make 1R. All of a sudden you're up 4R in the week, just by not doing stupid stuff like trying to enter the market. Like, I don't know what we're gonna do here, and I'm not afraid to say that. And a lot of times I don't know what we're gonna do 16 to 15 days out of the trading month. There's only like 6 or 7 where I know, okay, I feel really confident price is gonna go higher or lower. So those are days I want to be in the market, and I know those days I can make a whole month's salary or month's worth of work just in those 7 days. So.
Yeah, Ash Trade says chop, chop, chop. Ugly open so far.
Yeah, chop, chop, chop for sure. Here, I'll share my. So this 4-hour gap we're still trading inside this on NQ and ES on the hourly with both of them. There is a SMT at the lows and the highs. And that's usually a great indication of there's going to be, choppy price action for the day. So there's an SMT here from 2 p.m. to 4 a.m. So here to here. And then from this low at 6 a.m. to 9 a.m. right here too. So, and if you look at the one, sometimes I get criticized for just looking at the hourly chart every day. For majority of the session, but you can tell that it's not moving looking at the hourly because it's not a big body, right? It's a very small body with big wick. Yeah, that's pretty much it for me. I do have this video coming out today.
Small body, big wick. Got that one. Writing this down.
What? Okay, cool. It scared me there. I do have this video coming out today on how to batch up your fundeds in terms of low risk to A+ setups and things like that. So just watch my socials for that. But I'm gonna head out here. Good luck on everyone. The giveaway looks like we got 1.2K watching, so the bounty's already been hit. So I'll see you guys back here tomorrow.
Thanks, Nick. We'll see you tomorrow.
Yeah, take it easy.
Bye. DJ Day Trader said big wick energy.
Definitely.
I think some people avoid trading when there are like lots of wicks, because for some people that it means it's indecision. The market is like, I'm not sure what I want to do.
Yeah. Some people might avoid trading wicks.
Yeah. Hey, Corey.
This is definitely just kind of slow leaning into that barcode thing. So, what do you do?
Yeah. Keith said, "Are you still in that trade?" So I was stopped out at 242, and then I did re-enter. My stop is at 23,247. So this is my last attempt. And if it doesn't work, it doesn't work. Then I am done with trading for the day.
I've got the orb going, and then this happened real fast. I just tried to do a quick little, which account was that on? I was trying to do a quick little thing. It already took some off. I was doing a little range trade here, buying the 33 level. So I'm trailing that now, and then I am well, both the orb trades are technically down right now. So, okay, so this is the one that I just kind of grabbed for funsies there. Fortunately, I was able to real quick. I took 2 off. I got into 4 instead of 3. No, I got into 5. I got 3 off. Okay, so I took 5, got 3 off real quick at that orb high, and then I'm going to try to trail these other 2. They might get hit though. I don't know. So here is the MES orb. It's not exciting. And then here's the NASDAQ orb, also not exciting. Hopefully we can get those being exciting here. So yeah, in the meantime, oh, here we go. Yes. By the way, guys, you see that trailing? This is what I love doing. This, it's all automatic. All automatic.
No hands.
Oh. Love that. Thank you, market. And really, I'm probably going to pull this down just below this 50 level here. Be a little bit more realistic. I'll check and see if we got the orb trailed. This, wait, which account is that? That goes in this one. Okay, so we did get trailed on the ES orb. It has not trailed yet on the NASDAQ orb. So got those going too. But I'm watching this one a little bit more closely right now. Might get stopped.
Wow, a bunch of longs, you guys. Congratulations, all the longs.
It happens really fast sometimes. So
Yeah.
I was trying to show that, but
Jan passed 2 funded pass on that push.
Yes, let's go.
Let's go, Jan. Mr. Delusional, boom, TP hit.
Not delusional today. Love it.
Let's go.
I think we did hit the bounty, so I do think we are expecting a giveaway. It's just more fun when y'all don't know when it is.
Yes, it's more exciting, and we just never know. It keeps us on our toes. MyFundedFutures gives away so many counts, you guys, throughout the day. We're definitely thankful for that. And when people, sometimes people can get very like, oh, where's my giveaway? Yeah, it's not a good look. and people just don't really respond well to that. So we just have to stay patient and do our thing. And MyFundedFutures definitely rewards the loyal viewers and listeners. Ooh, look at your trade, Barbie. It is cooking.
There it goes again.
Let's
Automation.
Let's
Make it
go.
easy. This is the bracket that I put on, I believe, is the exact one that's in my Ninja Trader bracket video. It is one of my favorites. I have a few variations of it. That's why I couldn't figure out if I'd taken the 4 lot or the 5 lot, but this is the 5 lot. So I love it. You know what else I hear in my ear right now? Cha-ching, cha-ching, cha-ching. Every time it trails, it goes cha-ching. This is what makes trading fun, right?
Oh, I love the cha-ching. MyFundedFutures said, Barbie, TP. I think you're asking a code drop on Barbie's TP. Yes. Chat, if you want the code dropped on Barbie's TP, type yes. It's very exciting.
This trailing stop going here too, but we'll see. The orb would actually be hitting just after this level. So we'll see if maybe we can get them both off. Okay, here we go. Here we go. Oh my God.
Oh, come on.
It did this to me yesterday like 3 times.
Let's go. Let's go. It did do this. It did this to me and to you yesterday. Let's go. Come on. Get up there. Everyone get ready. Woo!
Right, Pigeon. It was edging my take profit.
Chat rocks 50.
We're out now.
Let us know if you got it. 50 free.
That one was a
reset.
battle, wasn't it? Okay, here's the ES orb. We're gonna get this one. Do it. Do it. This one I can't move the trail.
George got it. Sarah got it. Let's go. That was so fun. Congrats, Barbie. Congrats to all the winners. Everyone, type W for Barbie.
Sharing the love. Wins for chat, wins for everyone.
Yes. Lavish said, you have no idea. Thank you. Congratulations, Lavish. It is looking pretty. NASDAQ is pushing higher. ES is pushing higher too.
We should have at least trailed the NASDAQ one. Check in on that. Yep, it's still going. This one has a chance of hitting though. It's doing the same thing on that target. It's like, oh, hi, target. Bye.
Dang it.
I couldn't help it. I ended up exiting the one that was in my other account too.
I liked how earlier how you were like, oh, you were assessing the market conditions. And I heard you say, yeah, so I'm going to scale back on the number of contracts because of the market conditions. And that is part of one of the many ways that you help manage risk.
It is. This account, I was looking at my balance on it, and I was thinking if I take a max risk of $500 on ES or MES and a max risk of $500 on MMQ, and they both lose today, it's gonna piss me off. And so that's why I adjusted it where it was $300 each, because I like the $600 loss was not gonna piss me off. So that's how I managed that one today. Should be kind of based on the market, but with the prop accounts, we do have to kind of take into consideration the very small amount that we actually have to work with sometimes too. And I've gotten pretty good at recovering accounts when I need to, but I don't want to. So
Corey, the phone trader, said, I haven't been able to take trades. I'm at the 9 to 5 putting out fruits and vegetables. Oh, Corey, when I read that, I thought you meant you're eating fruits and vegetables. I was like, but fruits and vegetables are good for us. Yeah, so lots of people trade with 9 to 5s. What's your best advice for people who who have to work 9 to 5?
So that's most people when they start trading. Most people have other sources of income. Highly recommended that you have another source of income when you start trading. So for me, I had a flexible schedule. I know we don't always have a flexible schedule, but for me that was slower trades. So I was looking at higher time frames and carrying overnight a lot more. And I know we can't do that in the futures market, but that is an option if you're using something like options, where you can just slow it down and look at the hourly. We can do that in the futures market to an extent, though. You can really watch the hourly and literally just have limit orders sitting in the market waiting for when you get there. And then we have some other traders in the group that are in that same situation, and they're really into futures and prop firms. So they're waiting for that Globex open and trading that in the evening instead, which I also think is a great idea. I traded the Globex open a lot when I was first starting, just to kind of get that extra practice in. I wasn't always live trading it either. It was just like another chance to trade a live market. So we do have options. I think they're I don't know why. I think it's some of the trading groups, but there's like this idea that we have to trade the open or we're not doing our jobs. And that's just one time to trade. It is a really great time. But like, okay, so we've had older traders in our group that have not been enjoying this extreme volatility that we've had in the morning, and they've been trading the Globex with 30, 40 years of experience. They're trading the Globex because it's a little bit more like how the opens used to be. So it's not like you can say like you're an inferior trader because you trade an inferior timeline or something like that. It just doesn't work like that.
Roberto asked, what is the Globex open?
So we have the New York Open, which is what we've covered here today when the New York Stock Exchange opens at 9:30, but different tradable assets and tickers and pairs and all sorts of things are on different exchanges, and they have different open hours. Futures trade 23 hours a day, 5 days a week. So when we say the Globex open, we're talking about the futures open when it opens to the worldwide market. So when futures open in Asia, that's in the evening for us in the United States. And so they're opening first, and then, it's going across the world into Europe, and then eventually to the United States at our 9:30 open. But you have to remember that these other markets are also trading the same US or the same futures contracts that we're trading. So those are other good opens. We've got Asia opens at I always have to do the conversion, 6 o'clock Eastern because it's 5 o'clock Central my time is when the futures open, and we can get some pretty. It'll be slower, but it'll still kind of be that opening momentum. And then we talk about the London Open a lot. It's a really good time. If you go back and look at the charts, it's like, man, London had a great session, and we're looking at that because they had really great price action at that 2 or 3 a.m. open. Those are other good options too. But someone's pointed out that the crude oil news is coming, so you can watch out for that. Sometimes that'll move the market a little bit too if it's a big one. But it's more when we're looking for a surprise. Sorry, I got distracted by something. But when we're, it's like any other data point. If crude delivers some sort of surprise, that's what we'd be more interested in. I've been really tempted to take this trade off, y'all. We'll see. It just messing with my.
Ooh, it got so close.
Yeah.
Season.
I swear we go through phases where this happens for like 2 or 3 weeks, just to annoy me, just to make me rethink everything that I've tested and programmed. And I was testing this last night, and on ES the 1 tick offset was the good spot, so I'm sticking with it. I back tested this again last night. So.
Oh, so close. It almost looks like it's like by like a tick.
It might be.
Yeah,
it's 1 tick.
So the poll that was dropped earlier is the bearish push over. No, more to come. 56% voted. And yes, that was it. 43% voted. Very interesting. A little over half think no, more to come. Oh, market is playing some games. No luck, pure skill sets. 10 a.m. reversal incoming? Question mark.
Yeah, I'm just flattening those. I'm tired of it.
Done. Done. Locked in your gains. Chat, drop your questions for Barbie. Yash said, I was fast regarding the code drop. So there, I believe this morning that code drop was only 50 of the accounts. So hang out throughout the day. MyFundedFutures does drop more freebies. And then sometimes we also have social media giveaways. Those are really fun. And make sure you hit the notifications, turn that on. So once you hit subscribe, and then if you hover over the subscribe button, you can turn on all notifications for our channel. And then sometimes there are flash sales too, which is really great. Right now, it is 10% off any accounts using code YouTube. And that helps to support the channel. Thanks, guys. Yeah, Jay says, there's always giveaways, fam. Don't worry. So what do you guys think about a trading competition amongst all the traders? Would that be fun to see? Like all the traders on the show?
What do y'all think?
Chat, what do you think? Type in Y if you'd like to see that. Raphael Trace says, start it up. Oh, so I feel like if there's like an odds, Barbie, like in betting, how it's like, oh, this horse is likely to not win. So if you bet $1, you can win 20. I feel like that would be me. Like if you guys are going to bet, I definitely feel like I'm the underdog.
We'll see.
Tom says, yes, please don't full port, Terry. That's like the wild card though, right? Because like if you full port and you get it right, it can be like a big winner.
Oh my God. How classic was that statement? You guys, let's print that out one out and frame it. But if you're right,
That is why people full port, Barbie.
that is why people full port. That is, but if that's
If
gambling though, isn't it? That's
and
not a system.
and if you're wrong, it's a disaster. I think someone said something like full porting is like either it's going to be fantastic or you're going to wake up and you're going to have lots of regrets.
Well, we are right back down to where ES opened almost. Hey, market. Boring.
Oh,
Kind of expected that today, though, didn't we?
yeah, you totally did.
Doesn't mean I wanted it.
No, it is boring. Boring for a hump day. For some traders, like this is their day.
I think I've heard a few little things. I'm gonna pick on you a little bit, Terry.
Oh,
I've heard
okay.
a few little things that kind of made me think about something. This reminded me of me when I was a newer trader.
Yeah.
You're looking at all of these little things that can be like the holy grail secret sauce. So is it trading on Wednesdays? Is it not trading the big wiki candles? Like there's always like some magical rule that'll help you out. And when I stopped thinking like that and started thinking in terms of I want to understand the mechanics of how the market operates so I can understand it better, that helped me so much better than trying to like find these little tricks. I don't know. Maybe some people love the little tricks, but that just you've made a few little comments like that that reminded me of me. Like I hadn't really thought about that in a while, but like always trying to find the secret indicator, the secret day, the secret time. And once you kind of understand that the market is kind of a more random auction, but it's behaving based on levels and areas of the market, it helped me a ton. So just gonna throw that out there.
I like this. Thanks, Barbie. Yeah, I see what
You
you're
thought
saying.
you were scared when I said I was gonna pick on you.
I was like, ooh, what are you going to say? No, no, I knew it was going to be good because you are a goat. Yeah, Ash Trades agrees. There is no holy grail. As
I
like,
wanted it too. I was like, I'm
I
gonna
want
find the
it.
secret sauce.
Yeah.
Make it easy. But the easiness is just kind of understanding that there is no holy grail and that it's an auction process. And if we're patient and disciplined and come up with a plan and have a method for entering and exiting the market, we can make it work to our advantage. That's what the point of this is. We're not going to outsmart it. One person is not going to outsmart Enigma, right?
Dang it. But Barbie, I thought it would be me. Oh, so NQ is coming down off of those highs, green by about 80 points, and ES is green by about 11 points. Putting this is an hourly chart. ES is putting in this big wick. We'll see how it closes.
Like big wicks, and we cannot. Oh, sorry. Is that not what we're doing?
It is what we're doing. It's Hump Wednesday. I was thinking I'd love to like take that song and then like change it and make it geared for us, right? Like
I'm here for that recording. Let's do it.
let's do it. I like big. Oh, I mean, yeah, never mind.
You like big wicks? What? What's wrong with that?
What's wrong? There are people who've never heard that song. They're like, what? What are you guys talking about?
Well, we can't explain every reference. They'll catch up.
Yeah.
Go look it up.
We are close to
They don't
19
catch half my references, and I'm still entertaining the heck out of myself over here.
We are almost to 19,000, guys. Let's do it. Let's do it. I wish we could see it hit 19,000 during our segment, Barbie. I have a feeling it's going to hit later.
Yeah, y'all just you don't want to give us the fun, huh?
Oh, market is doing this a little reversal. It's heading back to VWAP. 60 NASDAQ and Dow's green by about 70 points. ES is green by about 10 points. So this is the auction that Barbie's talking about. It auctioned up and then it's auctioning down. And it is attracting sellers. Keith says, everyone sub if you have not. All right.
Yeah, I want the market to do something exciting here, and it's just not.
Yeah. It just has not. Oh my
Like
gosh.
we're just glued to this level. Like I marked this big weekly support. I don't even remember when I marked that. I think it was last week or the week before. And we're married to it. ES is in love with it.
So sometimes looking at the hourly definitely helps. NASDAQ is putting in a nice little reversal candle on the hourly. We'll see what happens.
I'm glad I ditched the orb trade, but otherwise we just stopped out at break even.
Yeah, which is not a losing trade. I mean, that's when people are like, oh, you hit break even, and then they give you a hard time. It's like, it's a good thing.
This one I exited in profit, so I like that better. But yeah, this is I'm always looking like, is the market going to be productive or not? And we're just hanging around this area where the market is not productive. So not very exciting.
Haynes says gold is moving is much easier today than index futures.
Is it? There's the gold hourly. Let's move down to the 5-minute. Look at that nice little trend it's been putting in. Nice little trend right here. Yeah, y'all won trading gold today. Oof. I looked back over at ES. It's taking a little bit of a hit here. But yeah, gold has had some nice little buys on it today.
Oh, ES is about to go red for the day. It's only 2 points in the green right now. NQ is only about 47 points in the green. Pigeon says, I'm on gold.
You could tell where I hang out sometimes, but y'all know about the 24 karat gold Labubu? I don't even know what the original video is. I just hear that sound on videos all the time. But original 24 karat gold Labubu.
I don't know this. I have to look this up. It sounds really funny. And No Siqui says,
well, I'm in the cult.
Labubus.
Oh, my Labubu's back there now. But
oh, is the Labubu the stuffed animal that you have? That's like a cult?
Yeah, if you buy one, then you're in a cult, I'm pretty sure. And you don't just buy one. Now we have several. Oh, look at gold still going. Man,
it's going.
Did not have that one pulled up.
Solo TSO asks, anyone here using standard deviation? You use some standard deviations, Barbie? Do you? I thought you did.
Yeah. So I don't know how to answer that because there's a lot of different ways that you can use standard deviations. Kind of one of the main ways that I use them, but this is really more average true range, but this is probably what you hear me talking about a lot, that we're 2 average true range or 3 average true range away. And that's actually one of the things. So we're looking at a daily, we're like glued kind of to the middle of it right now. If I take this box off, you see how we're right between these 2 Keltner channels. So that is kind of one way that you can look at that, but I don't think that's exactly what he was asking. But this is how I do it. And then you can also look on the hourly. So that was the ES. And it's looking more negative on the hourly, but we're still kind of in that normal range. This is the way I kind of look at it. And then if we go look at NASDAQ, it's doing something else. And this was my big like red flag caution warning when we have NASDAQ doing a completely different thing relative to the average true range bands than ES. Like it kind of makes the market be stuck in the mud a little bit. I didn't mean to do the one with the levels. It makes it crazy. But we'll see how this one's on the lower half and NASDAQ was on the upper half. It's just not real. It's not a good setup. So that is why I was extra cautious on the opening range breakout. I had a good question about this yesterday, and it was after the segment, so I can answer it. But everyone was not everyone, but I had someone interested in the results. They wanted to see how this 15-minute orb trade does in the long run, like over all these different periods. And the reason that I've been really focused on this year in particular, and then the second kind of time frame I'm looking at is the post-COVID years, is because the market is different. We have different ranges and different places that the market reaches to, and so I don't care so much how it would have worked in the 90s. It just doesn't matter that much. I want to look at the more recent data. But it is a breakout trade. So if we're going to say, well, how does it do in periods of lower volatility? I bet it does great. I bet it doesn't, because it's a breakout trade. So when I was looking at the results and I was seeing that it works really, really well this year, that's because we get those bigger ranges and the bigger breakouts. And that's why it tends to pay more. But so one of our jobs as traders is to kind of adapt our strategies to the climate of the market. And that's why it's really important to me to kind of understand the mechanics of the market and how all of this works, because then I can say, well, I should favor breakout strategies right now, or I should favor reversal strategies. Y'all haven't seen my reversal bot. It trades a lot. It can take a lot of trades, and I'm actually trying to wind that down in order to share it, because otherwise it's craziness and it's hard to really talk about. But that is one of the things that we have to do. Like the volatility of the market is something that we're taking into consideration, and we want to know, like, if we're in a period of low volatility or high volatility, what of our just little side quest there.
No, it's also good. Every morning, it's gold, you guys. Like, tune in and be like a sponge. Just absorb all of this good stuff. Thank you, Barbie. Dummy FX asked, which site did Barbie check Trump's speech time?
I'll show you. This is a good one. What is this called? This is rollcall.com. And there's a White House calendar. So can you see you can see the whole URL right here, rollcall.com/factbase/Trump topic calendar. You can see that just his whole schedule will be on here. You can probably Google White House calendar too. They have one on the White House website, but it doesn't, I don't know, it's not as easy. It has more things that I don't care about. This one just literally has the events that he's going to. So
thank you. That's a great question. So market awareness is kind of the theme today. Market awareness of conditions, news. No Sequi says, I mean, it's not that a bad thing. He's not taking so much of the stage, but you can always expect him to. Yes, it does add volatility. And as day traders, we do love volatility. Oh, Mr. Smith says platinum peeps. Oh my gosh, where does the time go, Barbie? It's already that time. We have to say goodbye, but we'll be back tomorrow, guys. And Ash is coming on. Barbie, last minute thoughts before we end our day together?
We all got some good insight on kind of volatile days versus less volatile days. I know that that's a hard skill to master, but I think being here and talking about it hopefully helps y'all understand kind of the difference of how to see them. And, we don't always know what it's going to be when the market's opening, but how to identify it after the market's open too, like kind of where the danger zones are. I hope that was helpful today. And don't forget that not every day is the same. So we can wait for the next opportunity when we really have those really great A+ setups. It's okay.
It's okay. It's hump day, guys. It's okay. Thanks, Barbie. We will see you tomorrow, bright and early. Can't wait.
All righty.
Bye. Let's welcome Ash to the show. Come on down, Ash.
Hey, good morning.
Hey, good morning. How are you this day, this fine Wednesday?
Not too happy because of the price action, but in terms
Ugh.
of the account and the withdrawal from the other day, that part I am happy about.
I saw your post on X, 777.
Yeah, just because you guys said 777 for the bounty on Monday, I was like,
Yeah.
all right, let's have some fun with this.
I love that. It's the My Funded Futures family. It makes us feel like we're a part of it too.
How's your day going so far?
It's going. Learning lots, which is good. There's that expression of it. What is it? It's something like if you're not winning, you're learning. Like, yeah. So I'm
That's
learning this morning.
You learn from your failures. You don't learn much from your losers, and you got to keep failing forward because that's how we get the experience. So conviction's built through experience. So no matter what the results are, we just got to keep on keeping on.
I love that. Got to keep on keeping on. Fail forward. We don't fail backwards, guys. We have to fail forward.
That's right.
Thanks, Ash. I will see you tomorrow. Have a great show.
All righty. Have a good day.
Thank you. You too. Bye, chat. Have a great day.
Good morning. Good morning. Good morning. Or good day, depending on where you're from. What's up, chat? How's everybody doing today? Welcome back to another segment with myself, Ash Trades. Hello, hello, hello. How's everybody's day going so far? How's everybody's week going so far? Going to take a moment to say good morning to the community, see how everybody's doing, and then I will go through my analysis and what we have for today's price action. But first, let's see who we have here today. Good morning or good day, depending on where you're from. Very excited to get back on here with you all. Good morning, Levi. Good morning, Rocky Mountain Trader. Good morning, Zavid. Good morning, No Luck, Pure Skill. Good morning, Pigeon. Good morning, Amir. Sharp, what's up? Keith, what's up? Denny, how are you doing today? Abhishek, good morning. George, good morning. Heather, good morning. Hello, hello, hello. How's everybody doing today? While I'm saying good morning to everybody, let's see how everybody is doing so far this week. Throw a 1 in the chat if you're red on the week. Throw a 2 in the chat if you're green on the week. And throw a 3 in the chat if you've yet to trade this week. Good morning, Lee. Good morning, George. Good morning, Jabbar. Good morning, Tao Trades. Good morning, Saju. Good morning, Simon. Good morning, Yellow Dog. Good morning, Mr. Delusional. Hope everybody's day is going well. Hope everybody's week is going well. Lucas, what's up? How are you? We're going to go through my analysis here in a minute. I just wanted to welcome everybody into my segment, see how everybody's doing first, and then we'll get into it. So let's see. We got a handful of 1s, okay? A handful of 2s as well. So it looks pretty 50-50 so far. A couple 3s in there as well. All right, so there's going to be peaks and valleys in this business. There's going to be losses. There's going to be wins. I've showed you throughout my time in the live account that I'm also about a 50% win rate trader. So that quite literally means I'm winning 50% of the time. I'm losing 50% of the time. So don't attach your identity to any certain outcome. Just focus on working hard every single day. Okay? If you had a loss today or if you had a loss yesterday, do not attach your emotions to it. You should give today's trade the amount of respect that you gave yesterday's trade. Okay? Just focus on working hard. All right? Do not attach your identity to any single outcome. You should be working just as hard every single chance you can get. All right, so just going to take a sip of water real quick, and then we will get into my analysis so everybody understands what I'm looking at during my session. Thank you very much for the patience. Let's hop into it here. Today was a rough morning, to say the least. Very indecisive. It's a hard read. There's conflicting information here. Okay, so let's hop in here and take a look. We have NQ hourly chart. We're going to be analyzing NQ and ES real quick. And this is what I'm pointing to. Let's take a look at the lows, right? Let's analyze these lows real quick. Notice how all of these hourly candles never swept the previous hourly candle low. Okay, so what I'm trying to say here is look at the 6 a.m. hourly candle. The 7 a.m. hourly candle never swept that low. Same thing here with each candle thereafter. None of the candles are sweeping the previous candle low. Okay, why am I pointing to that? That's because I'm going to go over here to ES. And what is ES doing? The complete opposite. ES, it continues to keep sweeping the previous hourly candle low. Right? So what is that, chat? What is the one concept that we continue to keep talking about that we use as confirmations to getting into a position? Right? It's a Kraken correlation. When two correlated assets are doing something different at the same time, that's what a Kraken correlation is. All right, that's great. We can analyze a Kraken correlation, but what does this mean? Right? A bullish Kraken correlation would mean that there's strength in the marketplace, that we've taken liquidity below the lows. Okay? That is the use of SMT, to show when liquidity has been taken and to show strength or weakness in the marketplace. All right, that's great. We can identify the bullish SMT at the lows. And now here is the issue. Here's the issue that I'm trying to talk about. Take a look at the 3 a.m. swing high. Notice how ES has not swept the 3 a.m. swing high. If we hop over here to NQ, let's use that same point in time. Notice how NQ did sweep the 3 a.m. hourly swing high. Would you look at that? There is SMT on both sides of the marketplace today. Okay. I saw Nick pointed to it too. So if this is a little repetitive, forgive me. I'm here getting prepared for my segment as well. So I also have to conduct my business. But this right here is the exact thing that is telling me to do nothing today. Okay? Yes, hear me clearly. Every single day is not a trading day, right? So thank you to MyFundedFutures. Earlier in chat, MyFundedFutures specifically pointed out, right, how it's a skill to know when not to trade. Well, I'm pointing to the reason how or why I'm not trading right now, right? So you can see this. This is not hindsight. We can go in and do this step by step too, if you'd like, right? Like, let's go back to the open of today. Here's the open of today. And you can already see this. Ready? This is the 8 a.m. candle, so give me one more candle. Hold on. Let's get to New York open here. Okay, 9 a.m. candle, so New York open, right? At New York open, let's take a look to see if that was already present so that we know not to trade, right? Hindsight's not going to do anything for you. You need to know how to act in real time. And this is how I act right here. Seeing, right? You can already see the bullish SMT at the lows at New York open. ES swept. Oh, wrong candle here. At 9 a.m., ES swept the previous hourly candle low. At 9 a.m., NQ did not. So you can already see before New York open begins that there's bullish SMT at the low. You can already see at New York open that we went and swept out the high. If we go back to ES, ES did not sweep out that high. So this information is present before New York Open, right? So seeing this, anytime you see conflicting information, that is the thing that's saying do nothing, right? Knowing when not to trade, this is when not to trade. When you have conflicting information, right? I only want to be trading when it's so obvious, right? That price is one-sided, right? There's only bullish SMT at the lows. There's equal highs to aim at. We're bouncing from a daily bullish FEG, right? And there's no conflicting information to that. That's when I want to be executing. If you have certain concepts that you use, and those concepts that you use, you see it on both sides of the marketplace, you got to be able to have the ability to sit on your hands, right? You got to have the ability to be patient and wait. Okay, this is where that mental and emotional intelligence comes into play to be able to not trade, right? If you're so impulsive that you have to take a trade every day, then you're basing your decisions upon your emotions and not the information that's shown on the screen. Okay, so for me, for this reason, I didn't have a trade this morning, and I'm not interested in this price action. It's just not doing anything, right? We're just sweeping out the high. We're sweeping out the low, and we're going back to the high. Maybe we sweep out the high again, right? It's very indecisive action, right? On top of the fact that now comes my entry function, right? So here's the second thing in terms of knowing when not to trade, right? If you're going to sit there and say that this is your entry function, right? A breaker block plus an FEG, right? If this is not on the screen, then what are you executing? Honestly, if this is not on the screen, what are you executing? Right? So let's go in and look for this at New York Open, right? And we could do it step by step. I understand that it's replay now, but I don't have the morning segment. We could, I talk about this stuff on my live stream in real time, just like I'm talking about the 10:30 to 11:30 segment in real time. Go and find that here, right? Go and find a model there, right? There is no bearish breaker. There is no bullish breaker. We're going into 9:45 here, and there is still no model. You do not see this on the screen, right? This isn't anywhere, right? A long position. This is also not anywhere, right? A short position. So you have two different things that are showing you that you should not be pressing any buttons. So now it just comes down to your mental and emotional intelligence. Okay? Can you control your thoughts? Can you control your actions? And can you control your feelings? To be able to objectively analyze this price instead of being influenced by your emotions. Honestly, you got to be able to objectively review this price. Price doesn't care about how you feel. Price doesn't care about what you think. So, this morning was a very ugly morning. I really have no interest in it at all. I wouldn't be surprised if we continue to keep ranging, right? So now moving forward, right, what would I look for the rest of this session is this right here. Let's just continue to keep chopping it up. Let's sweep the lows. Whoa. Back that up there. Let's sweep the lows. Let's sweep the highs. Let's continue to keep ranging. And I'm fine with that because I know that I'll just sit on the sidelines. I'm capable of just sitting here and watching. Okay, so take those notes down. The two things that show me in real time when not to trade is when there's conflicting information, right? let's go through my model again so that you understand in terms of a step-by-step process, right? Let's go out here to the daily. Let's get out here on a daily, right? So this is now we're doing a step-by-step process in terms of how I engage with the market. And for all the individuals that have been working with me here on stream, this is going to sound very familiar, okay? The first thing that I do is I get out on the daily chart and I'm looking at swing highs, swing lows, and FEGs. That's how I determine a bias, okay? Look at where price is currently located, right? If we're using the most recent information, price is located in the middle of a range, right? Let's take the swing high to the swing low. Here's 50% of the range. Let's just extend this out into time so that you can see it. Where are the settings for this? Labels, prices. Where's the extend line thing? Oh, extend to the right. All right, now you can see 50% of the range. From swing high to swing low, this is what 50% of the range is, right? And within 50% of the range, there is no fair value gap to use, right? There's no gap in here. There is no bullish gap. There is no bearish gap. So in terms of the model that I use, when I'm on the daily chart, I'm looking at swing highs, swing lows, and FEGs to obtain a bias. If price is not located at any one of those locations, ding, 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 there's the first alert saying you don't have a defined way of moving forward. Right? If you can't even analyze the very first part of your model or your process or whatever you want to call it, you should know not to do anything, right? You should only be executing when you can clearly identify your routine, your model, your process, your concepts, whatever you want to call it. So seeing that I can't even develop a bias here, I'm already saying, it's not clear. There's nothing here that I can use. But we can still try to move forward, right? Because the next step in terms of the model is then looking for SMT to confirm that idea, the idea being the bias. Oh, wait, there's no bias because we can't develop one, right? So what SMT are we even looking for? Well, we can't even find the correct SMT because now if you're looking at SMT, you're looking at both bullish and bearish SMT. So once again, in terms of a step-by-step process, I can't even get to an entry function because I can't define the first two pieces of my process. In my opinion, that makes it very clear to me to not press any buttons. Okay, so I'll give a moment for everybody to respond to that. If that makes sense to you, let me know in chat. If you have any questions regarding that, let me know in chat. Let's go over this information because this is an extremely important conversation. Seriously, I mean, this is where accounts are made or blown. So if you can't understand when to engage and when not to engage, we need to work on that. So if you have any questions about it, please do throw it in chat and let's go over that information. Like you have to get out of the emotions, right? If there's this like need to take a trade, right? That sounds like an impulsion, right? That's not you objectively analyzing price. If there's some kind of need to make money, right? Then I'm going to go tell you to go get a job, right? If you don't have a job and you're trying to rely on day trading, you need to have that need to make money at your day job because you have to realize the randomness of this market. You have to realize that the market doesn't owe you anything, okay? Can you please repeat the second point of when not to engage. So the first point was conflicting information. And the conflicting information that I'm currently showing you on the screen is that there's bullish SMT at the lows and there's bearish SMT at the highs. Okay, so that's the first one, is that there's conflicting information. There's SMT on both sides of the market. So it is not one-sided in terms of which direction we're going. That's the first one. The second one is if you have an entry function, right? I use a breaker block plus an FVG. Okay. This right here is not shown on the screen during New York Open. Right? Even if you want to try to point to this and call this a breaker block right here, right? You get swing low, swing high, swing low, new high, right? In terms of my entry function, I need a breaker block plus an FVG. So let's highlight the breaker block. Let's highlight the FVG. Notice how the FVG is not overlapping the breaker block. Therefore, it cannot be the model that I trade, right? The FVG is either overlapping the breaker or it's not. If it's not, it is not a unicorn. So the second way of identifying how not to trade is when your entry function is not present on the screen. So conflicting information is number one. No entry function is number two. All right. And even here on NQ, this is ugly. NQ's a lot. This is just up, down, up, down. This is just choppy, ugly price action. Okay. So those are the two things when you have no entry function and when you have conflicting information. Ash, you sometimes post London setups on your X. Do you take them as well, or do you just post them for afterwards? I'm from the US, okay? I'm on the East Coast of the US, so I'm sleeping from 10 p.m. to 6 a.m. in the morning. I do not participate in London session, okay? When I execute, you can see the execution labels on the screen, so it's very clear what I do execute and what I don't execute. When there is no execution shown on the screen, I did not execute the position. Okay. Now I've had this question a million times, and I'll answer it for you before you even ask. Why am I posting that then? Why would I post that? Well, let me ask you. Do you think LeBron James only shoots the basketball when he's in the game? No. He shoots the basketball every single day of his life so that when he's at the game, he could perform better. You understand what I'm saying? I don't, to learn, to work on my craft, I don't need to execute the position every single time it happens. If you truly understood the randomness of price action, you would understand that you don't want to execute every single time it happens. But should you show up and learn? Should you show up and work every single chance you get? Yes. Absolutely. Right? How do you build the skill? How do you build the skill? It's by doing it millions and millions of times over again. You don't need to be blowing your accounts to obtain that skill. Look, I'm not even logged in right now, right? Like I'm still showing up and still learning and working. But there won't be any executions here during my segment today. How can I learn more about your model? Go to my YouTube page. I have an entirely free playlist. It's called the Unicorn Model Playlist. The entire model is shown right there. So feel free to check that out as well. Ash, do you trade RR or the liquidity targets? I've been sharing my live account stats. I did it again this morning over there on X. I'm a 50% win rate trader at a 1 to 2 risk to reward. So I focus on the risk to reward. Okay. You have to put the numbers in your favor. All right. You got to put the numbers in your favor, and you do that with your risk management. All right, your winners need to be, well, for me, let me just provide some clarity here. You are in your own part of this process, so your numbers might be different, but it's the 1 to 2 RR that I'm referring to here, right? Winners need to be winners need to be $1,000. Losers need to be $500, right? So I'm not talking about a 1 to 2 RR in terms of this right here on the chart, right? This is not what I'm talking about. What I'm talking about is the average amount of your wins and the average amount of your losses. That needs to reflect 1 to 2 risk to reward. For example, if you go and look at my average winners right now versus my average losers, my average winners right now are around $900, and my average losers right now are around $400, right? 1 to 2 risk to reward. And you have to understand that this is an average, right? This is an average. So we're talking in terms of averages, okay? You're not going to have the same exact dollar amount every single time, right? Some of your losses will be $300. Some of your losses will be $400. Some of your losses will be $200, as long as the overall average still reflects 1 to 2 risk to reward, right? Some of the wins are $1,500. Some of the wins are $1,000. Some of the wins are $2,000. It's an average, okay? Your average wins need to be 1 to 2 RR of your losers. Very good question. Very, very good question. So if you're finding any value from the conversation, if you're finding any value from all the giveaways that we do here in the community, if you're finding any value from all the hosts, all the experiences that we share, all the trades that you've seen here, hit the sub button. That way you can also communicate with us here in chat. Hit the sub button, like the video. We're continuing to do this every single day of the week. Alrighty, let me grab another sip of water, and then let's continue to keep going through those questions and information. Alrighty, thank you for your patience. Did your mindset, don't know why I can't read this morning. Did your mindset shift when going to the live account? Like, did it feel easier? This business is very hard. This is one of the hardest businesses there are to run. It's always going to be hard. So no, it did not get any easier. It's still hard. After years and years of doing this, it's still hard. So the mindset remains the same in terms of falling in love with the process, allowing the results to be a byproduct of it, understanding the randomness of price action, and aligning my actions to that. All right, let me just dive into that one statement a little bit clearer, because everybody always asks me, why don't you trail your stop loss to break even when you're in profit? I understand that I have to accept the risk before the risk is taken. I understand that even with having a process, that does not guarantee you a win. It doesn't matter if you have probabilities in your favor. There's a random distribution of probabilities here, right? So you can have a 50% win rate, but still go on a losing streak of 7 losses in a row. Why is that? That's because there's a random distribution of probabilities. What I'm trying to say is, if you have something that works 70% of the time, that does not mean every 10 attempts, you're going to get 7 of them correct. You're going to have losing streaks. You're going to have winning streaks. You're going to go 50-50 sometimes. There are no guarantees here. And that's what I was trying to say in chat when Barbie was talking. And thank you once again, Barbie. Some incredible information, as always, on such a consistent basis every single morning. She already said it. I'm just repeating her. There's no holy grail. Okay, there's no secret sauce. You know, there's not that one thing that's gonna, you know, make or break you. Okay, you have to accept the randomness of this market, and you do that by managing your risk. Okay, so what I'm focused on, going back to the original question, you know, why don't you move your stop loss to break even? Because I've accepted the risk before the risk is taken. I've accepted the randomness of price action. So the thing that I'm focusing on is risk management. How do I ensure that the averages of my wins and the averages of my losses reflect a 1 to 2 risk to reward? You have to allow price to actually reach your targets. Okay? If you're raising your stop loss to break even, you are quite literally stating you're accepting a break even trade. Right? The moment you move your stop loss to break even, I'm gonna go ahead and bet on the fact that price is going to come and take you out at break even. Throw it in chat. Who's experienced this scenario before? Let me know what you guys think. Who's experienced this before? Price has ran beautifully after you've taken an entry. It goes a couple points away from your take profit. So then you're sitting there saying, I don't want to give back that profit, so I'll raise my stop loss to break even. I don't want to let a winner become a loser. And then it comes and takes you out at break even. How many times has that happened to you? How many times does that happen to you? It happens all the time. And then even better, that's usually what induces the emotion to make you overtrade. Because then you're sitting there saying, I was so close. I was right, and I didn't decide to take the profit. I should have won there. Well, your action of moving your stop loss to break even is what allowed that break even trade to happen. Okay, so the next thing that we need to talk about is the numbers, right? If you're a 50% win rate trader, just do it real quick. 50% win rate trader, and we'll just use random numbers. We'll say $200 is your risk. That means $400 should be your reward, right? That would reflect a 1 to 2 risk to reward. Okay, and we win 2 trades, we lose 2 trades. But now here is the make it or break it moment right here. Those losses are full losses, right? So 2 losses at $200, that would be, minus $400 of losses. Those 2 wins are just above break even because we're dealing with the scenario that we're talking about. You raised your stop loss a couple points above break even because you don't want to allow a winner to become a loser. Okay, so your wins total about $100 because you got taken out back at break even. Therefore, you are net negative, right? So it doesn't matter if you have a 50% win rate. It doesn't matter if you have a 50% win rate if you're net negative. So what you're saying, Ash, is that once you get into a trade, you don't just adjust the exit. Excuse me. I really don't understand why I can't read today. What you're saying is you don't adjust your stop loss or your take profit. That is correct. I've accepted the risk before the risk is taken, and I've decided before I've taken the trade that it's either a loss of $200 or it's a win of $400. There is no in between. Accept that before you take the trade so that you can clearly understand how you want to execute. And in return, if you know exactly how you're going to execute, then you're not going to feel those emotions during the time of, because those decisions are already made. You don't have to make decisions during the time of. You can click the button and you can go walk away because you have no more analysis to do. Once you click that button, the risk has been accepted, you've made your decisions, and now it's time to ensure this right here, your risk to reward. Your risk to reward. It's the same exact thing with the 70% win rate, right? If you have a 70% win rate and all of your wins are much smaller than your losses, it's going to be really hard to make that progress. Okay, so again, if you have any questions about this conversation, feel free to throw it in chat. I know we're not pointing to what's currently happening in price, but risk management is the #1 priority at all times. So we need to have this conversation. Okay. On top of that, I already explained to you. I'll just do a quick little recap for any new viewers that are just coming in. I have no interest in price today because we have a lot of conflicting information. Okay. Take a look at this right here. There's bearish SMT at the highs. ES has not swept the 3 a.m. high. And on top of there being bearish SMT at the highs, there's also bullish SMT at the lows. So for that reason, for the reason that there's conflicting information, I have no interest in participating in price today. Okay. So just a quick recap. Do you use any indicators to enter your setup for additional confirmation? No. You see what's on the screen right here? This is what I use. Price action. If you're referring to these, this is the watermark. This right here. This first indicator is this. Okay. And then the kill zones, that's just to look at what London session did, right? We talk about consolidation profiles. We look at London session to see what it did to Asia session. Okay. Well, I don't need an indicator to do that. I do that so you all here on the stream can see what I'm talking about. Right. It's much easier visually to understand what London session is if I have that on. So no, I don't use indicators. I'm a price action trader. I create a bias from the daily chart. After creating a bias, I look for a cracking correlation that supports that bias. Then I go into the lower time frame looking for a breaker block plus an FVG. I took the trade even though I knew about all the SMT. Felt like I need to trade because I didn't take a trade in 2 weeks. So what was the thing that pushed you to trade? Was it an emotion? Was it a want or a need to have some kind of result? Was it a monetary reasoning? Did you need to make a certain dollar amount today? What was it? What was it? Because that's the thing that's going to make or break you. Okay? The ability to control that want or need, that feeling. Hi, Ash. I have a question. Today, using your concept, I thought we were bearish and used SMT from the 3 a.m. high. What did I do wrong? Yes, there was bearish SMT at the 3 a.m. high, but you're not looking at the other side of the market. That's the entire conversation here this morning during my segment is that, yes, there is bearish SMT here. You are correct in that. And if you are bearish, you want to see that. But the time to execute a bearish bias is when you only have bearish SMT. Okay? Not when you have both bullish SMT and bearish SMT. You're not looking at both sides of the market. That's the entire conversation this morning. There is a cracking correlation. There's a bearish SMT here. There's a bullish SMT here. So since there's conflicting information, that's what you're not seeing. And that would be a reason why not to execute today. When you have conflicting information, just simply choose to stay patient and wait. When you want to be executing is when you have one-sided information, right? You're bearish. There's bearish SMT at the highs, no bearish SMT at the lows. In fact, at the lows, what you want to see is equal lows because that's a draw on liquidity. That's a target. So when it's one-sided, that's when I want to execute. When it is not, that is when I know to be patient. How do you know if it's SMT? This is what SMT is. It's very simple. It's a defined definition. You have to use two correlated assets, right? ES and NQ are two correlated assets. Bearish SMT is when two correlated assets are doing something different at the same time. Okay, so we're analyzing the highs. Whoa, chat. I got to stop for this one. 50 free resets. 50 free resets using code WED50. Wow. What a surprise. So you guys see that in chat there? Amazing giveaway. Thank you to MyFundedFutures. Chat, 50 free resets using code WED50. Who's going to get one? Who's going to get one? Throw a W in chat if you got one of the giveaways. Wow. Huge. Thank you. MyFundedFutures. Absolutely amazing. Absolutely amazing. Who got one? Throw a W in chat if you got one of the free resets. Congratulations to all the winners. Nice little surprise for us during the segment today. The amount of value being given away here on a day-to-day basis is absolutely incredible. Congratulations to all the winners. Let's hop back over into the conversation. Question is how do you know it's SMT? This is what SMT is. Let's imagine the chart on the left is NQ. Let's imagine the chart on the right is ES. Notice how NQ took out the swing high. Notice how ES did not. These need to be the same 2 points in time, right? Let's say that's 10 a.m. Let's say this is 12, right? This also needs to be 12. This also needs to be 10 a.m. Okay, so using the same 2 points in time between two correlated assets when they are doing something different, that's how you know it's SMT. All right, so this is an example of bearish SMT. It is the same exact thing for bullish SMT. You're just analyzing the lows. Same exact example, so I'm not going to put the text on there, but notice how the one on the left took out the swing low. Notice how the one on the right did not. That's how you understand that it's SMT. All right, so let's go and do that in price action. All right, so let's look at these lows here. Okay, see the lows? Let's point that out. Notice how each of these candles are taking out the previous hourly candle low. Would you look at this right here? All right, 6 a.m., hourly swing low. 6 a.m., hourly swing low. This swing low was swept on ES. This swing low was not swept on NQ. Bullish SMT. Same exact thing goes for the highs, right? We also had bearish SMT at the highs. Notice how this swing high was not swept on ES. Notice how this swing high was swept on NQ. Again, that's the entire conversation this morning. when there's conflicting information. That is how I know when not to trade. Very good question. Quick little example of SMT as well. Very good question. So chat, do me a favor. If you're finding any value in the community, if you're finding any value in the stream, if you're finding any value in any of the giveaways, sub to the channel, turn notifications on, hit the like button. We are continuously doing this every single week. Are your YouTube videos sufficient enough to learn the model? No. No. You can learn the model, but then you have to put in the time. You have to sit here during the session and collect the data. Okay? The model doesn't matter. What matters is your ability to control your emotions, to control your thoughts, to put risk management as the number one priority. It doesn't matter what model you trade. It doesn't matter what system you use. It's the operator that makes profitability. The person clicking the buttons is the one that makes the difference, not the system that is being used. I could give you the same exact system that I'm using right now, and I guarantee you we will have different results. Why is that? It's because it's not the system that matters. It is you that matters, right? It's what's going on up here. What are you thinking as an individual? Your personality, your traits, right? Okay. Also, he wasn't the one inventing the model. Yeah, that's correct. This market's been around for hundreds of years, and I'm only 30 years old. So here's a quick little tip for you all. For anybody that's on social media, if you were, following somebody on social media and they claim to have made something, surprise, surprise, they didn't make it. So sorry if that hurts your favorite influencer, but reality of the situation is there's nothing new under the sun. Okay? So all these new fancy words, all these new fancy models, sorry to tell you, but they didn't create it. They didn't make the market. It's a marketing tactic. Yes, hear me clearly. It is a marketing tactic. Plain and simple. You didn't create it. He didn't create it. She didn't create it. The market was made a long time ago. I don't care who you're talking about. Go ahead and point to anybody. They didn't create it. Sorry to tell you that. I don't understand why people can't be transparent. It's pretty simple. This market was here a lot longer than any of these people. So there's nothing new under the sun. There is nothing new under the sun. So any other questions? Any other information? Feel free to throw it in chat. Gladly willing to go over any portion of this business. It's been a phenomenal conversation so far. So thank you to everybody in chat. Thank you for participating. It is creating a lot of value getting to go over these questions. So thank you, thank you, thank you. Ash, do you ever trade PM session? No, I don't want to be staring at the screen all day long. Okay. I like to work on my health. So normally after the live stream, I go to the gym. And then I also have other businesses that I run. So I need to also give my other businesses some time and effort as well. So during the PM, I'm usually focusing on those other businesses. Any other questions? Any other information? Still got another 9 minutes before Tom comes up. Definitely stick around for Tom's segment as well. Great conversation today. Looks like the bulls are finally starting to step in here. The long-term bags definitely appreciate that. I still don't have any interest just because price is moving higher. That doesn't mean anything. Okay. Once again, you do not need to trade every single day. You should only be trading when you're capable of putting the probabilities in your favor. What factors decide if somebody is a discretionary trader or a mechanical system-based trader? I'm sorry, but there will always be some form of discretion, right? Even if you're using some kind of mechanical entry function, you've decided to use that mechanical entry function, right? So there's some kind of decision that is always made no matter what. That's what discretion means. So no matter how mechanical you want to be, there will always be some form of discretion. Okay? So any other questions, any other information, throw it in chat. Still got a couple more minutes here with you guys. What do you guys think? Are we going to continue to get higher prices? We did a good job yesterday looking for a new low of day. When I left the stream, we did end up getting a new low of day. So congratulations on that. Let's see what chat is thinking again. Do you think we're going to continue to get higher prices? Can we make it to the previous day high? That will be the question. Will we go to the previous day high? Yes or no? Throw it in chat. What is your win rate? I've stated it many times. You can also see it on my X. I provide the statistics there. I'm a 50% win rate trader, and I focus on 1 to 2 risk to reward. That's another marketing technique. I highly suggest everybody becomes aware of that. If somebody is claiming a 100% win rate, if somebody is claiming a 90% win rate, I'm telling you that that is marketing. Having a 100% win rate is unrealistic. That is not real. Okay? You will have losses. Okay? So accept the fact that you will have losses and deal with them professionally. Okay? So the question is, chat, are we going to make it to previous day high? Will we continue to see higher prices? Yes or no? Throw a yes in chat if you think we're going to go to previous day high, which is what I have marked here. Let's see if NQ already made it to previous day high. No, it did not. So what do you think, chat? Are we going to go to previous day high? Yes or no? Reminder, 20K is near. Don't miss your piano lessons. I need to get on that because we are moving quickly. I've not taken any lessons yet, so might need to book one. What concepts would you use if one day you woke up and forgot everything about ICT? Once again, I don't subscribe to anything. I do not claim to be an ICT trader. I was trading long before I ever heard of ICT. I still don't claim to be an ICT trader, so I'm not really sure where you're getting that from. I don't claim to trade ICT. Said that many times. I don't subscribe to a certain terminology. That's what I was trying to talk about here, is that these people didn't create these things. Okay, this market was here long ago. Because your model is exactly as his and same name. No, so you could call my model a breakout model. You can call my model a reversal model. I think just because he has a large following and everybody likes to reference him. They assume that everything that's being done is from him. That's not the case, right? I was executing breakout trades, right? Breaker block, breakout, downtrend, uptrend, whatever, opening range breakout, whatever you want to call it. I was doing that years ago, years and years ago. So I love that we get to have this conversation though, because you guys are just, I guess, I don't know. You guys are stuck on the ICT thing. I don't know. I'm sorry, but I could go back about 10 years ago now and show you the same exact trades of me talking about downtrend breakouts, right? Uptrend, downtrend. So if I said an uptrend or a downtrend, would you call that ICT? Right. So for example, right. Let's take a look. Let's take a look. Give me a second here. All right. Here's yesterday's trade. Okay. What would you guys call this? Right. What would you think if I pointed to this right here? What would you guys call this if I pointed to this right here? Here's yesterday's trade right here. Let me analyze it like this to see what you guys would call this. What can you see on the screen here? What would you call this on a screen here? A double top. Great example. What else can you call this? What else can you call this? Support and resistance, right? We got rejected. We got rejected by resistance. Therefore, I took a short. So where does that fall? What would you guys call that? So there's your first example. Here's your second example, right? So either you're shorting from resistance, like you should be, just like you should be buying from support. Okay, there's your first example. And then let's talk about this as well. What would you call this right here? You have an uptrend right here. Right? There's a clear trend here. We were moving higher. We're making higher lows and higher highs until this point in time where we broke the trend. Right? This would be a uptrend getting broken. Right? So it's the end of a trend. And now we move lower from here. Go look at my executions from yesterday.
Listen to the man, everybody.
Tom!
Hey, Ash, what's happening?
How are we doing today?
Doing great. I was listening to your segment, as always. You tell me how you're doing, because I was missing the AM session partially. So what happened? Tell me something good.
So I'm quite bored so far this morning. I didn't get any executions. It was very indecisive to start the day. So for that reason, there wasn't really anything clear that I was willing to take any risk on.
I agree. Yeah, I just got back to my computer around 10 a.m. and I was like almost like grateful, like, oh my God, this market open at 9:30 was absolutely like a carnage here, like up and down, up and down. So I made a few scalp here and there, but anyway, I'm glad I survived. but yeah, most likely, I think we will go a little bit further higher. I think. I'm not sure, but we'll see.
The majority of chat, I did just ask them too if we would make it to previous day high. That was the question I was leaving everybody off with, is whether we would make it to previous day high on both NQ or ES. And it looks like the majority of the community is looking for a continued push higher there.
Yeah, it seems like it's happening. Yeah.
So,
oh yeah.
I did actually want to take a moment to maybe have this conversation with you too, because I love having the debate. I love being able to go back and forth with other people.
Of course. I'm
very open to other perspectives and hearing others' opinions. So what do you think? Are you in this Enigma? Are you in this ICT? Do you
So
subscribe to a certain way of how you trade? Is basically
yeah, so
what I'm
first of
curious
all,
about.
so first of all, I was a Colt member back in 2021 or 22. So I'm not an ICT Colt member anymore. So let's just clear that out of the way. I told that a few times already to the chat that I'm not an ICT Colt member. I respect him for his lectures and everything, but let's just leave it at that. Otherwise, I learned a lot from him. Nowadays, my trading has actually got like, I use coins nowadays, as you can see. So I use coin flip every day. I use this jar of coins to make my decisions, and it helps me a lot, actually. But no, anyway, serious to be serious. What was the question? Oh yeah, how am I doing with the ICT stuff?
Yeah. So in a sense, what would you call yourself? Like, do you define your system by some kind of, like support and resistance, or a breakout trader, or an ICT trader, or an indicator trader? Do you identify as anything?
Well, I'm somewhere in the middle, I guess. I would say that I'm kind of deviating away from the ICT concept. So if I could say this in one sentence, I would say that I'm more likely leaning towards a supply and demand trader, but like a little bit reverse engineered. So supply and demand trading, but still kind of using those one or two base concepts from ICT, which, by the way, I found proof online that it's basically old concepts. So the gap theory, which is the fair value gap, and liquidity and all that stuff. So combining smart money a little bit with supply and demand, that is what I use. And I have to say, by the way, because there is a certain indicator system that I'm testing in the past 12 months now, I might gonna be implementing exponential moving averages into my trading because I'm having better and better results. I'm not ready to, storm the gates with all that stuff, but I'm getting good results. So I'm definitely, carving out my own way. But so far, I would say supply demand with a bit of an ICT or smart money thing there, but just something like that. So I'm somewhere in the middle. That's it. I don't know. But I'm not a Colt member. I'm not a Colt member. I have to say that. All right. So that's it. I'm not in the tinfoil stuff and all that other thing. So I don't care.
Very good. Yeah. And so, chat, just so you know, just so we're clear about the entire conversation, it doesn't matter how you trade.
Exactly.
All ways are acceptable. Whether you want to trade moving averages, whether you want to trade support and resistance, whether you want to trade ICT or opening range breakouts, we're all here to learn. That what the overall goal here is that we should share our experiences so that we can learn from others. We should work with each other so we can hold each other accountable and get 1% better than our prior selves, right? We're not comparing to anybody else. So at the end of the day, who cares? Who cares who made these things? The only thing that I care about is that you guys are finding a way to get green, right? Exactly. At the end of the day, it doesn't matter who made what, who claims what. All I want is for everybody to have the ability to have a source of income through these charts. That's what really matters.
I completely agree with you. And, as I always repeat myself, like at the end of the day, it's basically all about risk management. So you can do this like 1,000 ways back and forth, but at the end, it's going to be all just risk management. So, and I'm saying this to you guys in chat that no need to overcomplicate this trading because everybody is looking for the next hype, the new complicated stuffs and everything. Basically, it's so simple. The strategies are super simple. You don't need to look for anything complicated. But the risk management, that's what we need to go for. That's it, I think. I mean, I know that.
I agree. I agree with everything you're saying. And that's why I want to have these conversations, because getting somebody else's perspective is better than just, being one-sided and being like, no, this is the only way to view the market.
Exactly.
There's 1,000 different ways to do this, and the only thing that matters is everybody finds a way to become green.
Exactly. I 100% agree. So, but that's why I think here at My Funded TV, like everybody has a bit of a different perspective. All the hosts have a different perspective how to approach the markets. And that's why I think there's so many value here on this channel. If you just stick around, every day here on My Funded TV, it's worth to listen to everybody, because you might get some small information from Ash, from me, from Matt, from Bull, Barbie, Terry, from Nick, everybody here. And then you will finally, but I'm not saying it's going to be a shortcut, but all these small information pieces are going to help you to carve out your own way, because the end goal is not just risk management, right? It's also to carve out your own trading style. Basically, that's it. Your own way, I think.
Right. And so along those lines, in that same conversation, how do you figure that out? Like what did you do in terms of what was your process to even carving out and understanding what you're capable of executing?
Well, there was a turning point when I actually I didn't have a payout for like 5 months last year, from February until June, and the reason was oversizing, but too much trades on the mini. But anyway, that's not the point. The turning point to carve out my own way is actually stepping a little bit away from ICT concepts. It was too overcomplicated for me, because I was learning like 10 concepts at the same time. So I did the same mistake, like I think everybody does at some point. Like I was trying to apply 10 concepts on the same chart in the same session, and I was just getting contradicting signals and everything. I was like over confused with myself, and everything was just confusing. And so I remembered I subscribed to a mentorship years ago, and it was all about supply and demand. So I said to myself, okay, I just need to step back and let's just go back to the basics, like support and resistance, supply and demand. So, and also size down the micros. And so what I realized that, let's just keep it super simple. And I just draw out a few levels on the chart, and I sized down like 1-2 micros. And all I did, I was just holding the trades, and I realized that, man, this is not complicated. This can be super simple actually. And so those small profits started to pour in, and somewhat that few weeks last year in June, in the middle of the summer, I guess in July maybe, that was somewhat a turning point for me. That, okay, I think, and by the way, and again, no disrespect to anyone who is an ICT member. It's good. I'm respecting him for the lectures, but I kind of turned away and didn't follow him on YouTube anymore. I mean, not technically, but I wasn't listening to the lectures, and on Twitter, I'm not following his tweets. And I was like, okay, it's starting to work. Like I was focusing on myself. I wasn't really following anyone else on social media. I was just focusing on my own progress. And I think that's something that anyone can do. Like focus on yourself, on your own progress, measure the data, collect the information, and just keep it very simple. That's the key, I think. I think that was the turning point.
So what it sounds like was more of a trial by fire. It
something like that. Something like that. I was having my 5th month. I was having payouts in 2023 and 24 January and February a little bit. But after 5 months of having 0 payouts, I sat back in the chair, and I was like, man, there is something I'm doing wrong. Definitely doing wrong on risk management. But I was keep seeing signals on the chart everywhere, like different direction. I was like, okay, this is too much. I need to clean everything. We need to step back to something simple. And it all happened together at the same time. And I was like, okay, I don't care about anything on social media, especially not ICT. I don't care about the new YouTube videos. I don't care. I'm just going to focus on very simple stuff. And when I simplified it and I sized down the position, that everything got better, basically. And again, let me state that again, with all my respect, this is not against ICT himself as a person or as a trader or whatever. I don't care. I respect the lectures. It was just more simple to focus on myself, and that's it. So
see, but I find there to be a very valuable understanding here, and that is that you're owning your own business. You put the time in, you put the effort in, you click the buttons, you took the time out of your day to learn these things. So in my opinion, that's what it boils down to for the individual to put the work in, for the individual to collect the data. I don't see there to be a reason for anybody else to take ownership of your effort, your work, and the amount of time that you put into this.
Yeah, I guess we can say it like that. And by the way, by the way, thank you for asking me this, because I always wanted to talk more about this stuff. And thank you for for staying here, for asking this. And I wanted to ask you the same, by the way. So, what was the turning point? What would you call yourself in this matter? I mean, do you look for? I know that you said that you don't really care about fundamentals or the news anymore, right? I think you said something like that. So how would you describe yourself? I mean, price action trader or supply and demand, support resistance. What is your main go-to in this?
So just like you, it took a lot of testing, right? Just coming up with an idea, trying it, seeing if it works. Okay, it doesn't work. Let's try something else. That doesn't work. Let's try something else. So that's why I said trial by fire, because that's the road that I took. I tried the moving averages. I tried the support and resistance. I tried the opening range breakouts. It was a matter of going through that experience to figure out what worked best for myself, and collecting that data is the reason why I'm even here at this point. So if I were to even like put a name to the type of trader that I am, I would call myself a reversal trader, is what I would call it.
Nice.
When you could see, and that's the funny part, is that it's all the same thing. The same way that I'm saying I'm a reversal trader, somebody else might call that support and resistance.
Yeah.
All I'm doing is, when price is above a swing high, I'm looking for a short. So I'm looking for a rejection of a resistance, just like the same thing at the lows. Like when we're below a swing low, I'm going to look for a reversal and I'm going to look for a long. So you could call that support and resistance. You could, if I trade during the New York Open too, so that might be an opening range breakout. There's the overall point is that there is no real creator of these things. That all you should do is figure out what works best for yourself, what works best for your personality, and you should do that through testing. You should do that through collecting the data, because that's how you build the muscle memory.
Exactly.
You have to click the button. So you should take complete ownership of all of your decisions, all of your actions, and your entire business.
Exactly. And by the way, I do like that concept, like trial by fire. I think basically that's going to be the strongest thing, because someone is successful with ICT stuff, or successful with trend line trading, or bull flags or bear flags. It doesn't necessarily mean that the other person is going to be successful as well. So yes, trial by fire. I love that, because you just need to go through some losses, some pain, some failure, to know by some time that, okay, this is not going to work for me, and the other thing is more than likely is going to work for me. And this is what happened to me. So I overcomplicated a lot of stuff, and basically that's what happened. So I just
amazing. So sorry for the surprise conversation.
No, Ash, I just want to thank you for. I know you overstayed, and thank you, and I'm very grateful for all this. I know you have a lot of stuff to do, but I'm grateful for the questions, and thank you for staying with us, by the way, in this stream.
Yeah, hopefully you didn't mind me. Hopefully I didn't step on your toes at all. I was very interested in having this conversation with you. So I thought,
Ash,
it would be
if you want to
idea.
stay, if you want to stay, you're welcome. We can do my segment together. But I know you're busy. You have other businesses. I know. So you can stay. You can stay anytime. You're welcome here. All right.
I love to hear that. Well, then, with that being said, we should set up another one. I love going back and forth. So
you know what I'm gonna do? Maybe next time or next week, whatever. I'm just gonna pop into your stream, and I'm gonna be pouring you with questions, and that's it. That's what I'm gonna do.
I think that's a phenomenal idea.
That's what we do.
Thank you, chat. Thank you, Tom. It was a great conversation today. I know it was a little bit of a different conversation, but
I loved it.
Part of the business.
Yeah,
So
exactly. Ash, thank you so much for being here with us, and obviously, stick around. But I know you have business to attend to. But thanks again for
I
joining
will
us.
be heading out now. So I hope everybody has a great day.
All right.
Thank you again for your time, and definitely stick around for Tom's segment. He's going to jump into some value here.
Something, yeah. Something.
All
Definitely.
righty. Have a good day, everyone.
You too. Have a good one. All right, chat. Here we are. What an awesome conversation with Ash. Let's hit that W for Ash, everybody. This was just great. Nobody's asking me anything. I'm just talking to myself. No, I'm just joking. Ash is absolutely, he was great. Thank you for the questions. And I think sometimes it's good to have a bit of a chit chat here about each other's journey. So I just want to say that thank you again, Ash, for this, because I think in this context, when we're talking with each other, I think you guys need to hear it as well, right? So yeah, it was a good thing. And also, obviously, we're going to talk about some good topics here, and we're going to go through some technical stuff as well. And we're going to see if I'm going to freeze again. Who knows? Yeah. So what was I wanted to say? Oh yeah, before I just jumped in or jumped on the stream, I was watching this unbalanced price range. So before we move on, let's just look back here. It's gonna be again. So hold on. Let's just stop for a second here. Let me repeat myself again. I learned a lot from ICT. All right. Without those lectures that I was learning from ICT in 2023, also in 24, I couldn't be here today, because those definitely helped me a lot. But since about a year ago now, I'm not really following all those things, the new concepts. I don't really care about it. I'm very happy where I am right now, and it's going to be even better for everybody. So I'm thankful for the journey, but I'm moving on my own way, and that's why I'm respecting his lectures. Other than that, I have no comment. All right. So I'm sorry if I offended anyone who is an ICT cult member. He helped me a lot. By the way, I told you guys this once. In 2023, I was having multiple surgeries in hospital, but that's a different thing. I was spending weeks and weeks in 2023 in the hospital. And what could I do, right? The only thing I could listen to is the ICT Twitter Spaces, which lasted for 4 hours, 5 hours sometimes, and the lectures. Guess what I did? I was listening, and I was having my little notepad, and I was writing. That's what I did. So I will be always grateful. Anyway, moving on, just to a small little ICT concept again. I checked on multiple data feeds on the micro. Multiple data feeds, and it seems like that yesterday during the AM session there was a gap here. I think this was the President Trump tweeted something about the tariffs with the European Union. Something like that happened here. I didn't see this gap on the mini, so I checked multiple data feeds, and it seems like that on the micro this gap was here multiple places. Anyway, I'm just going to assume that it's still there. Now, as ICT is calling this, when there is no overlapping candle with the body. So there's, let me just represent I don't know. I know it's not going to look good, but anyway. If there is no bullish candle, which is closing up this gap, I think ICT calls this unbalanced price range, because it has not been rebalanced. It has been repriced by the wick somewhat, okay? It has been repriced, but it has not been rebalanced. So rebalancing means, which is happening right now, we need up close candles. If possible, the higher time frame it goes, the better, right? So 5 minute, 15 minute, 30 minute, 1 hour, whatever. Up close candles in this unbalanced price range. Now, right now, it is rebalancing it. Yeah, that was a 10 a.m. news Oh, sorry. I thought that it was Trump. I'm sorry. That was 10 a.m. news. That was the PMI numbers, maybe, or something. I don't even know what it was. Sorry. Yeah, volume imbalance. Volume imbalance. I'm sorry. Yeah. But whatever it's called, it's definitely an unbalanced price range. So usually that means that it has to be rebalanced with an up close candle. So we need up close candles about 377, which is awesome, right? That's what the market is doing right now. I was kind of eyeballing with that level, but I wasn't sure, like for example here. So I wasn't sure if we're going to have a bigger pullback. I was a little bit hesitating earlier, by the way, somewhere around after 11 a.m., just when I finished my stream. I was hesitating to jump in, but then I thought, if I jump in, we're going to have a pullback and maybe it's going to happen later. But it seems like the market just kept on going. And so I didn't really want it to push it because, why push it? Anyway, so let me have, if you have some questions, let me know. Just a second. Sorry, just a second. Okay, I just had to text the market makers. So, I do have a direct line, but they never pick up. So I just leave a message, leave a bird. I'm still not frozen yet. That's cool. That's kind of cool. So unbalanced price range. We are going a little bit still higher. Previous day high is 404. Who knows? We'll see. So I wasn't at my computer earlier, and the London session, I don't want to really go into too much details here. The London session was actually pulling upwards to this 5-minute supply zone here, as you can see. We were streaming as well, but I think I took I was streaming. I think I took a long position to break the 5-minute zone, but then it started to reverse on me, so I closed it basically at break even. That was the only trade. And on the downside, and it's amazing how these levels are working. There was the 5-minute bullish order block here from the Asia session, also like a demand zone. And demand zone here, and it just went down there, perfect reaction, and just pushed it higher. Anyways, the market open was absolutely like bit of a I said carnage, but anyway, here is one more thing. The only scalp trade I did here is a 1-minute scalp based on the 1-minute demand zone. This is a good example, so let me just show you this before we jump into a bit of a mindset topic again. And if you have questions, I didn't freeze. Don't give me the don't give me the I'm gonna have a heart attack here. So let me show you this, and this is why I love the zones, especially at the right time of the day, at the right time of the trading session. Let me share this example, and this is going to be on the 1 minute. All right, 1-minute chart, bearish candles after the market open at 938, 939, and 940. Now I know, and this is on the micro, and I know this did not sweep liquidity at 145 or 140. I know that, but what makes it technically again valid, and I keep showing you guys these setups every day, because these setups repeating every single day. Liquidity sweep here, bearish candle swept it, and guess what's going to happen next? Yes, market structure shift. bullish market structure shift, strong push, even shifting up there. So that makes it actually a valid demand zone. I know it doesn't look like too awesome, but anyway, it happened. The market started to move, especially after 10 a.m. higher. But look at what happened. And maybe I'm wrong, and I'm always welcoming every idea. I look hot with my little beard. Thank you. Finally, someone noticed. Thank you. Thank you. Thank you. Yeah, I'm going to go into the London zone. Just let me explain this setup here. So it happened quite fast. Demand zone happened after the market open. Hey, Nava, good to see you. And here is an inversion gap. So this bullish gap at 10:04 got inverted completely at 10:12. So that was the first sign here, this inversion gap. The second sign was here when it created another fair value gap, and this bullish candle at 10:15 actually picked up liquidity. So I was a little bit late on this entry, and I entered somewhere in this congestion area. So I don't even know which candle was it, but I entered here, and my target was this one. I think I was around with the 1-to-1 risk to reward ratio here, and this was the only trade I took live on stream, and it was a great one. So what was the distance here? I haven't even checked it. Almost 40 points. I liked it. It was a good one. So let me just go back to the present here. Okay. Right here we are at the unbalanced price range. Now it's going to be rebalanced, and we're very close to previous day high. So we'll see how it goes. Okay. Good to see you, Nevab. Okay, no questions? Right. So that was a good setup. I really liked it. The London setup, yeah, just to go back to the London setup, on the 5-minute, there was also a zone here. Okay, this is a 5-minute demand zone. I forgot to show this. 5-minute demand zone. And as for target, you can still use it. So it's good for targeting. And if I went down to the 1-minute, there was actually multiple market structure shifts. So let me just go back for the example here. So yeah, took some highs here and then went lower. Market structure shift here on the 1-minute. And I didn't take this trade. I don't know why I didn't take it. I guess I was still like into the idea, into the concept of going for that 5-minute supply zone. But by this time, I think I think this was the time when I shut down my stream because I just couldn't wait anymore. But eventually we went down into that area. Yeah, it was somewhere here. But I just wanted to show you guys the concept that these levels, if you know where to spot them and how to spot them, it's actually doing like 30% or 40% of your daily analysis or game plan. And that is why I keep showing these zones every day here on MyFunded TV, because this is what I'm looking for. Once I see these levels, it makes it much easier to come up with the game plan. So yesterday we were talking about the daily bias. You will be copy trading 550Ks. I don't think so, Raphael. I don't think so. I don't think I will be. So I think it's too much, bro. I can't handle it. The pressure is a little bit too high for me on 5 accounts. I did try it. Like the most I've tried to copy trade was like 8 or 10 accounts. Obviously, I've blown all of the accounts with copy trading. I just couldn't handle the pressure. So when I was down like $300 or $400 And the first thing I thought, like, oh my god, 10 accounts times $400. I was like, no, I'm not gonna do that. I'm not gonna. This is just too much to take. So maybe 2 or 3 accounts maximum, which I copy trade. Maybe, that's all. I was emotional about it, by the way. I was. Oh, it was not for me. All right. So, yesterday we talked about the daily bias, or having a flexible bias, or having no bias. I mean, having a bias or not having a bias. I told you guys that I like the game plan that's called flexible bias. I'm usually like to call it game plan. So if I have my levels on the chart, and my favorite levels are these supply and demand zones, once I have these, only thing I'm looking for, and the market can shift, I don't really care about it, is to see a proper movement in the direction of that level. So once I see a displacement, a strong movement, strong price action moving in that direction, I'm not necessarily have to I don't necessarily have to see a classic reversal entry. So for example, here at this point, when this demand zone down here, just around the start of the 7 a.m. kill zone, early New York session, it was still not clean. Anyway, that's another good example. Just to go, maybe let's assume that on the 1 minute chart there was an entry here somewhere. That's still not enough for me to look for a reversal. It can be a continuation. For example, here, let's say that there is a zone up there somewhere, and if I'm confident, let's just assume that this is a supply zone, not an unbalanced price range. As the price starts to move like this, just before 11 a.m., these bullish candles, this is going to tell me that, okay, if I see this movement, we might going to see an expansion higher to my level that I really like to reach. So there's 2 things I can do. If I still have a level that I can sacrifice, sorry, not level, but a certain amount of profit, or a certain amount of or drawdown that I'm willing to sacrifice in my risk management plan, I can actually take an aggressive entry from here on the first pullback, on the first fair value gap, just go up there, or maybe have a FIB tool here somewhere and maybe look for the 50% entry level, maybe down there. So I can be super aggressive, or maybe I can add more to the position, like starting here, add more here. So I can use the ICT 2022 entry, which is the only main thing I'm still using from ICT, as a continuation setup, not necessarily have to be a reversal, right? So if I see this, it's okay for me because it shifted structure, swept some swing highs here, strong displacement with a fair value gap, and we have a clean target. That's all basically. But I've been talking about this, but we are going to be repeating this. Jan, no trade so far. The only trade I have was before 10. No, it was after 10 a.m. I was in a short position. That's all I had. And basically, technically 3 trades, because I entered to a scalp here as well. But that's all I had to do. I'm not going to give it back. I'm almost up $1,000 for today on funded accounts. For me, it's good, but, it's fine. And, hey, Oscar, good to see you. And if you have, I like the question there. I like the question. So, did ICT get kidnapped? Who knows? So we are 20 points away from previous day high, by the way. Oh, that pull is amazing. I like it. I like that. So no kidnapping of ICT. No. Let me go back to the 5-minute chart here. What else is to the left? Nothing. Okay, so this is most likely this is going to break higher, but who knows when. So there is one more thing. I mean, if you have questions, let me know. I'd be happy to answer about the technicals, the entries. I'm happy to share more info about this. And if there is no questions about, or you can ask about risk management, whatever. I do have an interesting topic, which we already talked about, but as I say, from this different perspective. And it's basically about protecting the trader, not just the capital, all right? Not just the profits, but protecting yourself, okay? I knew it. I knew that I knew Ash is ICT's nephew. That's why he keeps, that is why Ash is always keep telling about, all these unicorn stuff and everything. I knew it, man. I knew it. You have to do something about this. We had to wait for months for him to get this secret out there. And Jeff is ICT. Great. Okay. Okay. Ash may be also a ghost in the machine. Who knows? Bounty hit. I wasn't sure about the bounty. I wasn't checking the bounty. Tom, first made half of what ICT made and then talk about him. Oh, yeah, definitely. I never claimed that I made more than ICT. That's for sure. That's for sure, Saint. So I never said I made more than him. But I did say that I learned a lot from him. So I never, ever denied that I learned a lot from him. Jeff is the Ghostbuster. I wasn't sure. What my pick? There's no pick right now. Yeah, I mean, if you're asking about trade, what your prime? ICT funds the Fed. Oh my God, these comments are hilarious. If you're asking my prime trading strategies, basically I would say, and by the way, the simple answer that was Ash was asking me is I'm a supply and demand trader with a bit of a fair value gap stuff there. That's it. Okay. So unicorns, mermaids. Well, I guess we can have both. Might as well. What is the unbalanced price range? It can be. I mean, unbalanced price range is mostly a level where the candle, when there is no full, it has not been. How should I put this? There is no full body of any candle, so there's not a full bullish candle here to cover this gap, or there's not a full bearish candle here. So after this candle, the next candle's body started to print here. So there was no cover here, only the wick. So it has been offered fair value. So there's no fair value gap, no liquidity void. If there would be no wick here on this candle and this, there would be a liquidity void there. Some say it's volume imbalance. It's basically like it's still a gap, but only, price wicked up here, took some orders, repriced it, but a rebalance would mean that we need an up close candle, for example, here, right? There was no up close candle after this. It just started to go down and down. So it has been basically left uncovered. But now it's happened. Finally, today, we have these candles. So it has been rebalanced. I know ICT would say it much more properly, but, that's how it looks like. So, volume imbalance, void, exactly. There's many ways to call it, by the way. The thing is, there was no coverage here with any, on the higher time frames, including like even the 5-minute, 15-minute, 30-minute, with the full body. Only there was some wicks here, and that's it. The market didn't go back there until now. Yeah. Okay, so as I just wanted to say, there is one interesting thing that I wanted to cover. So, and it's about the mindset. I'm frozen again. Come on, man. We need to dope. So Yeah, there is an imbalance. Like liquidity void and unbalanced price range is basically both imbalance because there's an imbalance in the price. But the liquidity void is that there is absolutely no trading happened on that particular price. So not even a wick. No trading has happened on that particular price range. We can call both, I guess, unbalanced because it definitely has not been unbalanced. Or it's still an imbalance in a certain way. But, in terms of a fair value gap, especially if you look at, for example, a bullish fair value gap, it still has not been rebalanced because it's a buy side imbalance and sell side inefficiency. So in this case, for example, that 1035, buyers took the orders. I mean, buyers stepped in, but sellers below this wick. So let me just show you this. Below that wick, maybe I should zoom in. Below that wick, fair value has not been offered to sellers. So there was a selling pressure when this wick happened, but the fair value of that price between 211, and 226, fair value has not been offered to sellers. So this range here is still imbalanced price range here. So there's so many ways to call this. And I really don't want to debate, especially those of you who are true ICT followers, because I mean, there's so many ways to call this, right? And I understand that. And also, by the way, if you just go to YouTube and type in like a fair value gap or the 2022 entry model or even unbalanced price range or volume imbalance, I'm guessing there are dozens or maybe hundreds of different explanations or videos about the same thing, right? So many ways to go with this. Unmitigated gap. That's also a good way. I mean, this here, I would call this gap mitigated. Like this candle here actually mitigated this gap, but did not reprice it completely. But if there wouldn't be a wick here, and this would have left completely untouched. So for example, anyway, I'm going to use this, but it has been rebalanced later. Anyway, until this candle at 1035, this fair value gap was unmitigated for sure. But then it went higher. But yeah, I get it. I get it. Yeah. So now we're here. I think there's still one final push that needs to be made to previous day high. The only problem is when I usually enter a long position here, that's when the market decides to go lower and maybe sweep some levels. And by sweeping some levels, I think this 300 level is kind of interesting. Look at the bounce here, by the way, at 300. So I left this on, this 300 line. Look at how beautifully it bounced back up there. Kind of like a signal from price, from the market, that it still wants to push higher than previous day high. And that's why I kind of like price action as well. I kind of like reading the tape. It tells you a story, right? Anyway. We still have 50 minutes. I want to quickly dive into that mindset thing because, as I said, we talked about it, but it's still important, right? So what I mean by that, we always talk about protecting our funded account, protecting our evaluation account, protecting the profits. We need to protect our capital. We need to protect our family. We need to protect our car, our food, the neighbor, everybody. We need to protect everyone and everything. Our monitor, our webcam, everything. Our phone, our watch, our mind. And I want to talk about the mind. We need to protect our mindset. Like, I think we are just underestimating how important it is to protect our mindset, right? Anyone really thought about that? That how important it is to protect that state of mind, like that conviction in your trading model. Long pause. I know. Your confidence. Our underwear. Exactly. That fits the criteria. So our confidence, our conviction in our trading model, it's so underestimated, everybody. It's so underestimated. Imagine yourself. Okay, let's just play a little bit of a mind game here. Okay, we just have enough time to do that. Something is happening. Is this a sneaky code? Come on. Let's go. The code. Oh my gosh, it's happening. The code, everybody. Quickly. Come on. Quickly. Oh, I forgot to. I'm out of coffee. Next time I will bring some more. Congratulations for the winners. Something is happening. Yeah. I'm gonna make a t-shirt with that sign. I hope you guys got the code. Congratulations for the winners. I knew something was happening in the background, but you know. Exactly. We got to use our brains, because sometimes I know it could be a little bit boring while watching the charts and listening to my voice while you fall asleep, right? So you got to, we got to, shirt idea. Stick around. Something is happening. Coop, I like that. I like that. So, where was I? Oh, yeah. Talking about cars again. No. Am I frozen again? If I ever freeze again, I'm not gonna make a bet on this. So where was I? Yeah. Protecting the mindset. Okay. It's underestimated, overlooked by everybody. Really, even with the more experienced traders, because the mindset is our biggest not mindset. Mindset and confidence is our biggest asset here. This, besides discipline, besides, the edge, besides all the other stuff that we talked about. Without confidence, actually, it's even further down the line. Like we were talking about second guessing ourselves, right? Like, I said last week that how the tilt session starts. The tilt session starts with the second guessing yourself. Second guessing yourself leads to fear. Second guessing yourself is going to make you to do like trades that not even there. Maybe mess around with your position. Then it's going to cause fear, etc., etc., and you're going to end up on a tilt. Now, I would say losing confidence is even before second guessing yourself. Maybe, if we have to put them, next to each other, I think it's the most, losing your confidence is going to lead to second guessing yourself even faster. So you got to protect your mindset first. Everyone talks about, as I said, protecting the capital, but your mindset, your focus, your emotional edge is just as important, minimum as important, but I think it's much more important. So capital protection is not enough. Everybody's obsessed most of the time, about the stop loss, risk per trade. We all know that, what's your stop loss? How much you risk per trade? What's your daily drawdown limit? That's all good. That's just the numbers. That's part of the strategy, right? leads to the dark side. Exactly. Tilt. And you know, DS, the tilt comes from second guessing, and second guessing yourself comes from a lack of confidence. So lack of confidence is actually if you're not protecting your mindset. Okay, so yes, we talk about the stop loss, we talk about the risk per trade, we talk about the daily drawdown limits, all the usual questions and numbers, and the BMWs, of course. And that's great. But your mental state is still a mess. Those rules are not going to save you. If your mental state is not good, then forget about it. It's just, no matter how much we talk about the risk to reward and all that numbers, it's just not going to matter. You think it's going to matter, but it's not, because it's just not. You're still going to overtrade after a loss, right? Especially after the loss. You know, revenge trading, trade emotionally because maybe you're burned out already. And by the way, emotional trading equals to burnout, by the way. Emotional trading equals to burnout. Self-sabotage. Oh my God, I need to copyright this. I'm going to have a baseball cap. It's going to say sabotage. Sabotage, you know. I mean, I'm not going to put self-sabotage on it, but I do like the concept. So you're basically self-sabotaging even when you have a good plan, even when you have a good trading setup, you might do something stupid because you're already too much emotional. Anyway, what really does the protect the mindset means? It means that protecting mental capital, you're protecting your energy, you're protecting your clarity, and emotional control that make disciplined execution possible. Okay? Energy, clarity, and emotional control that makes disciplined execution possible. That is what you are protecting. Signs, for example, that you're not protecting yourself. You're trading when tired or angry or emotionally off, I would say. So sleeping is important. I say that against myself because I'm not really sleeping too much. This morning was the first time in quite a few weeks, maybe months, that I have actually overslept my London session. I usually start at 2 a.m. This morning I started at 2:30 because I overslept. I really have a sleeping problem. Anyway, what are the signs that are taking you to the stage where you're not protecting your mental capital, your emotions, your clarity? Being tired, angry, emotionally off, ignoring your own rules. Also, it's basically, we talked about this, feeling the need to trade. There was a lot of, I just got this comment today as well, like, geez, Tom, when do you ever take a trade? I got this comment, and it's perfectly fine. I got this comment today that, geez, Tom, when do you ever take a trade? When I started streaming in 2022, I come up to YouTube and I said, okay, I need to trade. I need to show action. I don't care about the result. I just need to push the button. But also without YouTube, and I was not on YouTube, I was like, I need to trade. When I sit down at the morning, there can be no session passing by without a trade. That was my mantra, It also came by a false expectation that I had about the market. It was a bad programming. Like, I need to push it. I know that the market is going to do something. I just need to figure out where it's going to go. It's so simple because the market is going to go to the right. We know that. It's always going to go to the right side. But as it goes to the right side, all I need to decide, is it going to go higher? Just 5 points NQ, please. Just 5 points in London session. We need to do that. Maybe to the downside. Who knows? Oh, it went up. Oh, instead going up, it went down. No problem. I'm going to double down and it's going to go up now. No. The need to trade, not the need for speed, the need to trade is a very big enemy. It goes to the left, I know, but we're going to talk about it in another session, and it's going to have to do something with quantum mechanics, and we're going to do a different session about that. All right. So the need to trade. Okay. Also, feeling emotionally wrecked after every loss. If you feel emotionally wrecked, even by a small loss, you also need to step back. It's not about the profit anymore. Okay. It's not about the money or the profit or that particular evaluation account. Fish lips, good to see you, man. So, okay, let's just move on. If you're burned out, as I want to say, your charts are not going to save you. If you're burned out, your charts, oh my God, it's 3 minutes and Matt is here. But I think this session is really, this topic is really important. Maybe we're gonna finish it next time. Yo, welcome. I think the Rocket Scooter fam is here, right? Time flies again. I was just getting, getting into this topic. The best part comes right now. Maybe we're gonna finish it next time. At what time do you stream or your channel? Yeah. I stream every day from 2 a.m. Eastern Standard Time, 1 hour before London session, all the way up to between 4 to 5 a.m. Eastern Standard. And I also stream from a few minutes before 9:30 market open up until like somewhere around 11. So twice a day. It's easy for me because... hey, welcome everyone. Good to see everybody. Yeah. So it's good for me because I live in Europe, and so it's convenient for me to trade London and New York. So I'm very grateful for this too. I just want to say maybe I think I got some new haters on my end because I was talking this stuff about ICT. Just to say that I'm not saying anything bad about him. I respect the lectures. I respect a lot of stuff because I couldn't be where I am in trading payouts without all those lectures that I learned from him. But I'm just saying, as we talked about this with Ash, like I'm making my own way. I'm carving out my own way in trading. And so I liked what like Ash said, trial by fire. I think that's happened to me a year ago. Like, it wasn't really a big trial by fire because as soon as I went back to simple things and simple stuff and I sized down, that's when everything basically changed. But until this day, I still, like tried to reduce the complications. Like, I know there's always an SMT around. There's always a propulsion block or a first fair value gap or something else is happening all the time. I don't really care about that anymore. And it's so much easier. But again, if I offended anyone with the ICT stuff, I apologize. I respect him for the lectures, but that is where my, opinion ends with that. so yeah, I think Matt is around here, by the way. So I just want to say that thank you so much for the questions. Thank you so much for the comments as well, for everything. And look at him.
I'm making my own theme music this time. What's
Come
up,
on,
Tom?
we want to hear you sing. Come on.
Rocket scooter. Wait, is that how it goes?
It's gonna be all right. Yeah, you have talent. I'm sure. How's it going, man?
Good day, man. I'm doing good. How about yourself? How was your stream today?
It was awesome. The chat is on fire, and we were just following price slowly up here into. Well, I thought that we're gonna break previous day high, but anyway, we were having a good talk, and we were also talking a little bit with Ash here, and so it was good. Good
Oh, nice.
topics. Yeah, and I also made like almost $1,000 today unfunded, so I'm happy. For me, I'm not gonna trade more. That's for sure today. Yeah. How about yourself?
Were you long or shorting today? What kind of trades did you pick up?
Well, I took a short position. I took a short position after, when was it? After 10 a.m. Actually, it was like around 10, 14, or 15. I took a short position into one of my zones. So it was basically a scalp-ish thing, but it was like 30-something points. But I liked it. It was a good trade. Yeah. How about you?
I took longs out the door. Like after yesterday, I'm taking them one day at a time. I still think the market's trying to figure out what it wants to do, and the volatility is still here. I had all my signals line up for a couple long scalps. I just basically hit it one after the other. I probably scalped 40 points in NASDAQ like 4 times in a row, and then I haven't really done much since then. Little bits at a time.
I always wanted to ask you, like, do you trade fundamentals? I mean, how much the fundamentals are affecting your trading decisions? I know I was looking around here and then, like in your streams, but I really don't know still. But I just wanted to ask you directly. So how are you doing with the fundamentals?
Fundamentals are a big part of me trying to anticipate why market's doing what it's doing. I don't base any of my day trades off of fundamentals. Really, fundamentals, even though something can be bullish or bearish, doesn't necessarily mean the market's going to immediately move off of those things. Fundamentals have delayed effects, right? And while I know in the environment, I typically have faith in the bull market if I know the underlying fundamentals are bullish. But a lot of times you'll see like crisscrossing where the market is looking bullish, but the fundamentals look bad. And the question is, when does it become bearish, right? Yeah. And if you try to short on bad fundamentals, it's like that movie, The Big Short, right? Michael Berry was like 2 years early to the short.
Oh, yeah. Wow. 2 years in that position. Wow.
Yeah. So what about you? Are you a big fundamentals trader, or like
no,
how does that really work into your
No. I tried it like maybe like 2 years ago. I tried to go with the concept, but what I realized, and even until nowadays, that I don't really think that the market, if we're talking about day trading and we're talking about a certain session, other than the market is spiking up and down for some news release, I think, and I'm really bad in this, but I think the market is not always reacting to the numbers as we would expect it to react. So it does the opposite thing many times. I think that is my opinion. But anyway, I just let it go. Basically, I just let that go. So you would call yourself more likely a technical trader, right?
I would say not even technical trader. I'm kind of like, so I really like fundamentals are looking at macro and microeconomics to make decisions, right? And technical trading is using price action as a mechanism for implying future price action, like shape of the chart or pattern on the chart or momentum on the chart or even indicators. So what I do is I call it I'm a positional risk type analysis, which is basically using positions to find volume. And so instead of looking at price action, I'm looking for volume. And so it's a different style of trading because it's more on the technical side, but I don't consider it price-based technical analysis. It's more like a volume-based analysis technique, but it completely ignores price action. So I don't use any price action, as a matter of fact,
so you said
on any of my decision making.
So you're saying volume-based price action.
Yeah.
I got this information.
Action,
and I got this thing from many people over the last year or two, even from people who I know in person, that, man, you should definitely need to look into the volume thing because it's going to help to make better decisions. So do you think it's a good idea to learn more about volume? And
I think
trading?
volume is the new approach for trading is that volume is king. Every time you see traders, anytime you do anything, you want to be first to do it, right? Volume implies the idea that first is the most important thing. If you know where volume will be and you're in a trade and then the volume comes in after you and pushes you, that's really the mechanism that you need to have price going in a direction you want it to go. And so the newer approaches to the market are trying to scope out where that volume will be more so than letting the price action confirm the thing that happened. If the price action moves and then hits a support and breaks out and you chase the breakout, well, it's a good indicator, but you're also late to the trade. I think my chart is on the screen. So like if you wait for the breakout, then confirmation, sure, you're probably gonna get the trade right. But in the volume approach, you can actually buy the dip first and then let the volume come in and then confirm the move and then use your old method as confirmation to hold on. So it's like a twofold approach. And
Mhm.
so volume base allows you to have the ability to get in earlier. Like if the market's dipping, where will you buy the dip sort of thing.
Nice.
Yeah,
Okay.
so the planning tool, it's really good. So anything you can use to try to scope out where volume will be is kind of like the new sexy when it comes to trading, I think.
I like it. I like that. All right. I'm happy that I could ask this because I was always wondering, like, yeah, I was hearing about volume concepts and technicals and fundamentals, but yeah. All right. So guys, you know what's the deal? You got to listen to Matt because this stuff is even new to me. A lot of stuff. I mean, not completely new, but I definitely want to learn more about it. So yeah. Anyways, chat, I'd like to say thank you so much for the segment and thank you for the questions and everything. Stay and stick around with Matt. And Matt, I just want to say have a good segment, have a good day. And I guess I see you tomorrow, right?
Yes, sir. Thank you,
All
Tom.
right. All right.
Appreciate
Have a
it.
good one. Cheers, everybody.
Man, great conversation. Yeah, volume is the new king. I feel like volume is such a great tool. I mean, I built my whole trading style around trying to find volume pivots more than caring about price action. I'm different. I see some guys have a question here about the ICT market maker story. And ICT is one of the big, trading styles that most people subscribe to. And ICT is a price action based technical indicator or technical analysis method, which is a great confirmation of a move or confirmation of momentum. It finds momentum, it finds price supports, resistances, liquidity, things like that. But as far as like a planning tool, that's the one place it is lacking, right? So Rocket Scooter doesn't measure momentum or look for breakouts or look for chart patterns or candles. We just find where volume is. Hand in hand, people that I know that trade ICT told me that Rocket Scooter was their missing piece. Together, it's a powerhouse. One plans for the move, the other confirms the move. And together, I think that it completely makes sense to me. So do I believe that ICT got kidnapped and by the market maker van story? Well, 59% of you, according to the poll, believe that that story is true. And 40% of you said, no, it's not true. Incredible. Somebody said they trade THC. Oh, okay, that kind of helps. Do I believe the market maker van story is true? I don't care if it's true or not. It's a fun story. And whether it's true or not, it doesn't even matter. It's a tall tale, right? Even if it's not true. Well, the plausibility of it being true is probably not true. But if you happen to know ICT or know Michael Hudson, he's a legend in the trading space. And legends sometimes have superhero tall tales. And whether he's just running with it for the fun of it or whether it's really a real story, doesn't even matter. I think it's a cool story to hear about. Do I think it's outrageous? Yeah, I think it's a little outrageous, but I like hearing it. It's kind of fun because we don't have any superheroes in trading, and this sounds kind of like a superhero's tale anyway. So, do I think it's true? I don't think it's true at all, but I don't care if it's not true. I think it's fun and it's cool to have legendary stories being told. I don't think there's a market maker out there that and market makers just there's not like a market maker is just a bunch of like goofy 20-year-old college grads that work at Goldman Sachs. These are market makers. People who work at Citadel, shit like that. Algorithms are running stuff. There's not any kind of central authority of the stock market, right? But whether it was sarcastic or whether it was, told as an example, and whether they just ran with it, I know Mike, he's a cool dude. But it's probably just a legendary tall tale. But it seems like 60% of you think that it's real. So either way, it doesn't even matter. It's Matt, I'm you guys a superhero. Well, that makes sense. Well, I'm gonna let you know I can fly. I have a cape and I can fly and I can fight crime. That's a true story. I actually one time flew over to New York Stock Exchange, and I personally was responsible for the flash crash in 2014, wherever it was. Just because I landed on top, when I was flying, I landed on top of the building so hard, everything crashed. This is a true story. And so this is real. So tell everybody that this is real. Yeah, absolutely. You guys were there. Y'all remember that, right? I was flying around on a rocket scooter in the middle of the exchange. People were like, what was that? But yeah, this is true. 100%. I've never told a lie, except for that one, and that one, and that one, and that one. Oh crap. So welcome to the afternoon session, Lunch Money with Matt, guys. People would have seen him on maybe it's been called for YouTube and traders to change their mindset on. I think it's the most widely used technical based trading system on the planet. And some of the most successful prop traders out there are using those methods. So in reality, I have to tell you guys, it's not the method of reading the chart that makes you the winning trader, though. Anybody can figure out where to buy and sell based on some kind of analysis. There is nothing out there that is better than anything else for the most part in price action. It's all equally good or equally bad or equal, whatever you think. What's really important more than anything is this part right here, how big you're trading and making sure that you are trading with good efficiency, entering at the right spot, not chasing longs late, not bag holding longs when it's falling, not trying to short bull markets, things like this. That's the most important part. And whatever you use to stare at the charts to prevent you from doing the bad stuff, and whatever you're using to help you do the good stuff, position management, position sizing, and all that is the most important part. It's not the ICT style trading that's making people millionaire traders, even though a lot of the big prop traders do that. They're just good traders. And that's just their chosen method of reading charts. Any chosen method of reading charts is a good method of reading charts. Anybody that has a great method of reading charts like ICT can still be a garbage trader because they don't understand actual trading. Remember, chart reading, and a lot of you guys are taught trading, and you buy a trading class, you learn a trading class, and as you're reading the stuff, you're just learning chart reading. And chart reading is not trading. Trading is actually money, betting, where you're betting, how much you're betting, when you're pulling your bet, when you're doubling down. The betting part of trading has nothing to do with the charts. And so a lot of people mistakenly think they're learning trading when they're really just learning charting. And you could have all the best charting tools in the world, ICT or anything, whatever you want to use, and still be an absolute terrible trader because that isn't trading. That's just analyzing the chart. And you need both. You need to be good at both. And good traders that do use that do very well, but because they're good traders, right? And good trading doesn't matter how you analyze the chart. You'll figure out something for yourself. Somebody says, I probably get asked this question a million times, so we're going to do the same mistakes over and over. You know that I make them. It just feels like it never ends. You never learn anything. Well, 4C, have you been journaling to see what your mistake is? Are you betting too big? Are you feeling weird? Are you rushing trades? Are you chasing longs? Like, what are you doing mentally in your game plan that's making you repeat the same mistake? What is the mistake, number one? Are you losing all of your money in one trade? Are you chasing a trend because you feel like fearful you're missing out? Are you scared to act like journaling is all about your feelings. Like, how are you feeling when you're trading? Like, are you feeling anxious? Are you feeling scared? Are you nervous because you lost the last day? You don't trust the market? Like, what is it that you feel when you're trading? This is the first part of exploring behavioral patterns you're trying to change. Somebody has some other questions too. So what do you guys think about what I was saying earlier? Matt has a cape flying over Wall Street. Yeah, every single morning, man. That's me. I ring the bell with my mind. It's not really them ringing. It's me. True story, by the way. Go tell everybody. Let's start another legendary story. Matt's rocket scooter started the flash crash 10 years ago. Somebody says it's the smugness that you like about typical ICT traders. Well, again, traders in general are smug. Let's just be real. Anybody out there is a trader. Trading, culture is all about smug, asshole, in your face, arrogant people. It's the world of money. It's a disgusting place devoid of common courtesies and morals and whatever. It's the poison of money. Give us a primer on position sizing, please. How do I know when to use micros versus minis? Now, that's a whole entire question. I do teach a boot camp class on this very thing and how to position size based on what you're trading, whether it's a prop account or not. I have actually a tool that tells you what your position size should be based on parameters of your current setup and your prop account. So if you go to our boot camp, which starts on Monday, we give you a spreadsheet that has everything in it. Tells you how to do it. What I normally do is I will, depending on what I'm doing, say that I have a fresh new prop account. Let's make up a number. Let's say I have a prop account with a $3,000 total loss limit, and then a $1,000 daily loss limit. I know that's not, this is just an average prop firm scenario. So what I try to do is I personally choose to give myself 3 days to fail. And then I give myself 2 trades per day so that one trade can miss and the other trade can hit. So total, I give myself 6 trades per account. I choose this because I have the funds to keep buying accounts if I want to, and I trade a little bit more aggressively. You budget how much you're willing to spend per month, and you come up with the same conclusion. If 3 days to fail means I can lose $1,000 a day and still have the account on the 3rd day I bust. 2 trades per day at $1,000 DLL means I'm trading $500 per trade. And so because of that, I can position size based on that particular loss metric that I set for myself. Let's say I fail every 3 days and the account cost me $100. Okay. And then the reason I came up with 3 days was because let's say that there's 20 trading days in a month and I'm going to spend $1,000 a month on prop accounts. Okay. So that means I can fail 10 times in a month. So if I fail every 3 days, that's 6 times in a month, comes in under budget. So you decide what your budget is to spend every month, whatever money you have left over. Then you subdivide into how much you're willing to lose and how aggressive you can go to still meet your budget. This is budgeting 101. And again, you guys don't think you're learning trading because I'm not even talking about candles and patterns, but this is trading. The math of the money that goes behind it is trading. That's really what trading is. These decisions. So back to the original example of losing $500 per trade. Now I can take the judgment call. And this is very important if you guys want to learn from me. Your magic numbers in S&P and NASDAQ futures are 10 and 40. These are your normal moves in any given sense of the market. You're going to plan for each of your trades, taking a stop loss roughly of those for this kind of planning. And so to lose $500 with S&P on 10 points, that's literally one mini, okay? Because one mini every 10 points is $500. One mini every NASDAQ on 40 points is 800. So I have to do 5/8 of a mini, right? For the most part, is that what that is? Or basically 6 micros to meet the same budget. Now I've got a position size that allows me to take 2 10-point losses in S&P and 2 40-point losses in NASDAQ and still come in at $500 a day, $500 a trade a loss, which is $1,000 a day, which is 3 days to fail. And if I fail every trade of those 6 every day for an entire month, I only failed 6 accounts at $100 and I came in under budget what I was willing to spend at $600. You didn't realize that trading is just like balancing a checkbook. This is some basic math that any prop trader should be doing on a daily basis. A lot of you guys are just loading up and not really tracking what you're spending, right? So does that make sense to everybody here? This is important. These are big decisions. Your position sizing. On this particular example, 1 mini and 6 micros will meet my goals, right? And so if you're learning trading and you're not making decisions like that, you're trying to run a business just like winging it. You're like, oh, I run a seafood restaurant. Well, what do you want? Yeah, we serve like oysters and crabs and stuff. How many crabs do you want? I don't know. Just throw them in the back. Well, how many do you need? It doesn't matter. We'll figure it out as we go. Yeah, but they're like king crabs, dude. They're like $500 a piece. Just give me like 65 of them. I don't know. Just whatever you got in the truck. Your restaurant's going to go under in a week, dude. If you're not literally actively managing your in, your out, your finances, how many oysters do you want? Whatever you got, just put in the restaurant. Yeah, but they go bad in like a couple days. Yeah, we'll figure it out. No, don't figure it out. Don't figure it out. Figure it out before you're buying the thing. Plan it out. Start with the budget. I have a job. I make $10,000 a month salary after taxes and after bills. I've got $2,000 of play money. Half of it goes to the family. The other half, the wife lets me spend on whatever I want. I got $1,000 to play in prop firms a month. Good. Budget it out just like that. How many trades can you lose per day? Give yourself at least 2 trades to lose per day. That way you can mess up the first one and get a second attempt. And that's a good pace. And then come in under budget and then set your position size off of that using 10 and 40 for S&P and NASDAQ. Good rule of thumb. You'll find out that most of your prop accounts, you're going to be trading micros, maybe a mini or two. Am I mocking you, Pat? Oh, 100%. I'm always mocking you, Pat, every single time. Pat likes to run a restaurant. His restaurant is full of crabs. That's all it is. You're stepping over him when you go to the table. Bump. So this is really it, right? Position sizing is everything. And the person that asked earlier about like repeating the same mistakes, make sure that you're also using correct position sizing, because a lot of times people think that they're making bad mistakes trading, when in reality, you're just going bust because your position is too big and you can't survive off of that. Easy rule of thumb, if you don't even know how to size your position, is just to cut what you're doing in half and keep cutting in half till you get comfortable. When you feel like you're surviving in a trading account, then you're at the other end of the spectrum. You're trading too low of risk. If automatically you can trade small enough that you're always surviving, then you are at the low end of risk, and start stepping up in your risk until you start hitting that sweet spot. Yeah, as Umut said, it doesn't matter if you use ICT concepts or support, resistance, whatever. As long as you have repetitive model and proper risk management, you can be profitable. Yeah. So the very first class in my boot camp, I'm going to mic drop for you really quick. The very first class in my boot camp is a scenario of a program I wrote that grabbed data and did this analysis. And what it actually said was that I proved with an algorithm that I wrote that you can actually randomly long the stock market, because the probability is the markets go up more than they don't. And under ideal conditions, remember, 70% of days are green, and even in bear market, 50% of days are green, right? Well, so statistically, you can long the market and make money over time. This is what your 401k does. And as time goes by, the other trick is that because the market can always go up, you could just randomly long the market. And if you survive long enough by essentially just keeping your position size small as you're losing and getting smaller as you lose, ultimately the bull market will eventually return and carry you. That you can randomly long the market and still make money trading, and make a lot of money trading. Prove that trading strategy is what your 401k does. As long as you're employed, you're buying stock and market's crashing, and you're buying stock and buying stock. You're buying stock every week. You get your paycheck. You're doing the same thing. If you were to still randomly buy, and that's randomly buying the market too, every 2 weeks, right? I proved that in any time frame, and it always works, that randomly longing the market at a random point in time, as long as you survive over time, you will eventually make money. So it doesn't even, and the reason for this thought experiment is to prove that it doesn't matter what you do. The only thing that matters is that you survive, which means it is a testament to saying that all that matters is position management. Is if you're losing money and losing money and losing money. And the thing that I proved was that if you were to lose half of your account at the end of a trading month, and that's it, you allowed yourself to lose a certain amount every day. And as your account got smaller, you traded smaller, to where by the end of the day, you had at least half of your account left. That's it. Losing 20 days in a month, which is every day you had half your account left. And then you maybe lost 20 days again, and 20 days again, you lost every single day. And your account goes from full to a half to a fourth to an eighth. You will still eventually make money over time. There has never been a period in history where that algorithm has failed to produce a winning trading strategy on randomly longing the market. And it's designed as a thought experiment, because you're not going to really trade like that. But thought experiment to prove is that all you really need at the core of anything is proper position management. And that's it. That's really all that matters. Proper position management. And it's crazy as it sounds, it makes a whole lot of sense, because when we stare at a stock market, it exponentially goes higher, right? And again, I teach a thought experiment is a thing that challenges you to think outside the box. It's not a real trading strategy. You're not really going to do that, but it's kind of a hypothetical trading strategy that most people use, because in your 401k, you're just buying stock every 2 weeks, and you're not applying any kind of ICT concept or anything. The minute your paycheck hits your account, they take that money and distribute it. And over time, the stock market has just exponentially gone higher and higher and higher and higher. All you need to do is survive the small periods of time that it dips, and ultimately you make money just being in it. And that thought experiment is designed to just teach you that that's all that matters is proper position management. It doesn't matter if you're using charts, patterns, candles, ICT, none of it. All of that stuff is good, but the juice is surviving and the right position sizes more than anything. Wait, we got 3,000 people watching this channel? No way. Guys, I have literally never seen the numbers on this channel be this big. Welcome to Lunch Money with Matt, you guys. Any questions about what I just said, though? It's a pretty cool experiment that I do, and I actually wanted to prove it. So on my personal stream, just for fun, I kind of want to do this maybe at the end of the summer, is I want to actually do the random longing the market challenge, which is what I'm going to actually do is have people in the community just vote on a time. And at that hour, sometime in that hour, I will long the market at an hour of your choosing. And all I will do is just manage my position, and I will try to make money in an account over time just doing the random longing challenge. Would you guys show up to watch me doing the random longing challenge just to show that it doesn't matter what you're doing on the charts? I bet you I could survive in a trading account just randomly longing the market. I wouldn't blow up. I promise I wouldn't blow up doing that. Because I can control my losses, right? Every other day is green. So as long as I keep my losses small enough over time, I won't blow up. So I can guarantee the challenge is, could I survive this account for an entire month, just randomly longing at a moment of y'all's choosing, and I will do it within the hour. How's that sound? It'd be fun, right? And it's to prove that position sizing and management is all that really matters at the core. Once you got that down, then you kind of embellish your trading strategy with styles, ICT styles, volume finding styles, whatever you do to find the style to enter and exit. But you can make a trade plan off of just basic risk management. And again, I want to do it just to show that I can survive with you guys telling me where to long and short. I've always wanted to do that to prove the thought experiment. Yeah, I won't blow up doing that, by the way. So where the hell did 4.5 thousand of you people come? Appreciate you guys being here. Somebody says, Matt is the best one here. Oh, shucks. You don't have to be so nice like that. YouTube algo is going crazy. Well, welcome to MyFundedTV. I am excited to see you guys all here. I've been making some trades all morning today. I've been trading. You can see my P&L down at the bottom of the right of the screen. I am trading long out the door. I have some really solid signals, by the way. Let me show you guys what I'm seeing on the liquidity map side of things. We had basically nice, easy, clean setup. The algo has up arrows basically from open, as well as bull zone support today. We know bull zone is my favorite place to long from. It's 90% same side close. So I always long at bull zone bottom. When this confluence ratio, the bull bear bias is greater than half, 72%. Market cap is bullish. I'm taking long. So out the door in NASDAQ, dude, I milked it all day. I was scalping for 40 points. It was incredibly great. I was done with most of my trading within the first half hour. I grabbed each one of these dips. We started long, got out, long, got out, long, got out. I longed right here on the first pullback, and then I held through this with the intent to double down at monthly hedge pressure and then carry it all the way up, and I did. So I longed here, held, closed there, and that's basically it. And then right before I got on the show here on my stream, I waited for the DD band bounce, and I took that long right there and closed out. So I've had just winning trade after winning trade after winning trade. I've had no losers today. 1, 2, 3, 4, 5 setups. Been pretty solid. The market conditions were bearish for like 2 days, which is so crazy. And then when we came back on Monday, everything lined up being bullish. Our greater market's super bullish. I have 3 indicators I look for a bull market. We call greater market. Number 1 is the bull bear bias ratio, 72. Anything greater than half means there's more market cap bullish than bearish in the stocks and the S&P. So that's great. The other thing is that SPY is gamma positive. This is QQQ. So let me look at S&P. Monthly options gamma exposure is this orange line here. And as long as the S&P is above the orange line, then it's bullish for the month. So we have bullish stocks right now. S&P greater than this monthly hedge pressure number. So gamma positive just means over the course of the month, we're still floating away from this line. Still nice and bullish. which is great. And then the final cherry on top is the what we call the monthly map, which is a 3-month outlook of the options landscape. And this thing kind of gives you a tour of where everybody's risk is over the course of time. You can see that we have pushed right back into bull territory in the S&P, and even where we are right now, we are back to being bullish for the month. It was a scare right here to throw us into bear territory. Right when we came back on Monday, we're like, well, bull market's back. That was the quickest 2-day sell-off that we've seen. And then we're back to normal. So S&P is in the dark gray. It's nice and clean and bullish from here with supports right at 629, which is about 30 points lower from here. QQQ is kind of like the one part that's a little concerning. NASDAQ hasn't broken back up outside of these bear nodes. You can see them, the light gray. So light gray is still that resistance area we need to break through. NASDAQ needs to end up right about here over the next couple of days to sustain bull side over time. So right now, it's like we're right where we passed kind of back into bull territory on S&P. NASDAQ has like a little bit more to go. Roughly about 80 more points, and NASDAQ's good. So right at about 23,450, NASDAQ's in the clear for being bullish again for breakout. So that's it, and I'm pretty clean. And today's a day that's showing me there are buyers stepping right back in. So we are good. We are good. I'm so excited. What's the bull bear bias ratio? It's called the DD ratio at the top left of the platform. We call it DD was a nickname we gave it. I don't remember 4,000 you guys came from, but welcome to the channel. All right. So you guys learned a lot today. Every single time on the show, I promise you guys a lesson. Today was position management, position sizing lesson. And, teaching you guys anything y'all want to know. Somebody says, what do I think about current situation, Matt? Like I said, this is what I think the markets was chopping around for a little bit. We jumped right into bear territory for the last 2 days. Yesterday, we tried to sell again, and today people are back to buying. So the market is picking up a bit and looking really nice. Volatility, again, we're not in the clear yet because the volatility is still kind of there. We look at the contango midpoint, which is a trick for futures traders on VIX futures. So I use this to understand the volatility in the S&P. And when we are above this key level of 1841 for the month, the market gets a little choppy, just like yesterday and just like Thursday and Friday. Now we are in the clear for now, which is really good to see. If we get back above here over the next day or two and we're here, then it's a no-go and market's going to die. But whatever scare we had, I can't really figure out what caused this because the market was very solid, very bullish. And then we had Microsoft and Meta earnings on Wednesday. Thursday, we had Apple and Amazon, and the market just sold off into Apple and Amazon. It broke through every bull pivot we had and just plowed down. And at the end of the day, Apple beat earnings, Amazon beat earnings, and the markets popped on both of those and still traded lower. And then the very next day, we collapsed out. So I don't know if people were just selling whatever it was they were holding to get out of the way, to rotate into something else. You don't normally see VIX go really high and then decay all the way out the next day like this. You don't, around this level, you don't normally see that. That shows that there's a huge transfer of money from somewhere or the other. Normally on a big VIX explosion excursion like this, it usually will kind of do this and work its way down over time, just like that. And so the idea that it went all the way up one day and all the way back the next day, maybe everybody's like, let's sell all of our tech stock and let's load up on everything else. Or it's a testament of how many buyers are just sitting on the sidelines waiting for any dip. The market has been so bullish and so bullish and so bullish. And maybe one firm is like, let's finally take some profit. Let's get out of the way. And all the hungry bulls waiting for a dip finally got it to get right back in. So we'll see. So keep in mind that you're going to pay attention to this key level. This is the equilibrium of where volatility is pricing in for the month. And anything above it, the market can kind of get out of control again. So far, we're safe. And what's the probability that VIX is going to move around? We look at the VVIX to tell, and if VVIX is below 100, we should be fine too. We're below 100 by far. So bull market can be quite back. I'm not doing any shorts. I was shorting for like very, very, very little bit of time. I'm still buying dips. I'm long in the market. I have those puts that I bought just in case the market does die out. But now I'm kind of convinced my puts are going to expire worthless, which is fine. I've been longing the market and I bought puts to hedge, which is great. Remember, I bought like $15,000 worth of puts just as a small baby hedge. in case the market did die out. But however, you see on the right of my screen and my funded accounts over here, I'm going to keep longing the market. And if the market dies, I'm going to 20x my money. If the market doesn't die, I'm going to inch back and make that 15K that I spent on puts like in 2 days. So that is it.
Tell the numbers, spin the wheel. What's the truth? What's the deal? MyFunded TV giveaway. Promises shining like a matinee. Win or lose, it's
Where'd that come from? I just hear music and I start dancing. I don't even know. Underscore REIT 25. Is that supposed to be Treat 25? Treat 25. So Treat 25. Thank you, MyFundedFutures. Wow, 25 free 50K scale accounts. This is why you come to Lunch Money with Matt. We like to bless you with all of these lovely giveaway accounts. Awesome, 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 awesome. That is incredible. That was really fast, huh? I hear music, and it was like epic sounding music. It felt like I was pretty cool. Anywho, yeah, you guys are all pretty fast. Dang, that was nice. All right. So I need to see some of your questions earlier, but you guys have any questions for me about market analysis today? Like, we're back to normal. I've been making most of my money scalping the long setups. It's been pretty good. Yeah, guys, hit the like button, subscribe to the channel. We are here every single day. Same thing. I'm here from only 12:30 till 1:30, so I'm here for about an hour. I've got about 22 minutes left on my segment. And then I stream on YouTube, so I'll be over there for the rest of the day when we in the show here. But well, all these new faces. Where'd you guys all come from? What are you guys normally doing at this time? This is like double our size. I think everybody's supporting this whole time your trading journey. Thank you, MyFundedFutures. Thank you, mods. Thank you, mom and dad. Thank you, siblings. Thank you, girlfriend. Thank you, bank account. It's like an Oscar speech over here, thanking everybody you know. I love it. I love it. Is there a way to tell if it's a short squeeze about to happen in NQ? You can't really tell if something's about to happen because a short squeeze is not something you can predict. A short squeeze is something that actually chain reacts and causes people to move. Like if everybody's short a position and then somebody just decides to randomly cover and markets pushes higher, then it squeezes more people and squeezes more people and squeezes more people. It's a domino effect. So you can't actually see a short squeeze building up. It just sort of happens. And the way that you see it happening is that the market actually speeds up as it goes higher this way. A move where the market goes like this is more of longs entering the picture. People are buying on some event and the event becomes less severe as the day goes by. Then that is longs entering the picture. A short squeeze self-catalyzes. One person bumps 2 and 2 bumps 4 and 4 bumps 8 and it moves like this. So a day like this is not a short squeeze. This is genuine buyers. The easiest way to tell it is the concavity of the actual move. People are actually buying. It's also supported by your indicators. This is bullish. This is bullish. This is bullish. People are actually buying the stock. And you can see it's not really a short squeeze because it's sort of like slowing down as it's moving instead of speeding up. Maybe the start of the day could have triggered a little bit of squeezing and maybe it's sort of like curving here, but it's starting to have an inflection point. And this portion of it is actually genuine buyers. People are grabbing the dip and buying it up again. So short squeeze, you can't ever plan for it. You can just see as it's happening why the market's moving, right? I'm bullish right now. Yeah, I've been bullish since Monday. Well, end of the day Monday. Yeah, I'm going back to bull territory. Can you trade options with live accounts? I think in MyFunded, no, it's all futures. What account sizes do I normally trade? When it comes to prop firms, I usually trade under a couple conditions. If all things being equal, I try to get the best drawdown to cost ratio. So the idea, this is the world's worst division sign. The idea is you might say like you get $2,000 for $100 and $3,000 for 125. And so whichever one gets you the higher ratio, the more drawdown per dollar you spend is really good. But also I'll take extra consideration if the DLL is fatter. DLL is my least favorite rule in prop firms. I hate daily loss limit. So I will actually pay a premium to have a fatter daily loss limit, so more room to trade per day. And I'll also pay a bigger premium if the account lets me get payouts faster. The most important rule is getting your payouts faster. Faster is the most important part of trading prop firms. Faster. If one firm says you can get 7 days to pay out, another firm says 5 days to pay out, we know here at MyFundedFutures, nice chunky 5-day to pay out. That's great. I will take a 5-day over a 7-day like it's the most important rule there is over a 10-day. None of this stuff. The idea is faster to pay out. I like with the scale plan, for instance, every day you're trading is one more day, a chance you can blow everything up. So staying in an extra 3, 4, or 5 days is a deterioration of your success rate. So for me, I'll pay as much as I can, just squeeze the time to pay out down and get that DLL as fat as possible. Then all things being equal, the best cost to drawdown ratio. Long story short, I'm usually buying the most expensive accounts. That makes sense. So usually the most expensive accounts, you're paying that premium to get all those rules out of the way. But I want to have an easier time to the goal, and I'll pay a little bit more upfront to do so. Yeah, and that's just me. So everyone has their own style and way of doing it. Some of you guys may not have the money to throw out the most expensive ones, and you may have to kind of size down, use some of those rules to help you decide if you want a rule of thumb. That's how I do it. Yep. All right. So for the rest of the day today, I'm kind of been sitting on the sidelines after I took all my longs. I have 5 accounts I still haven't touched. I rotate in. I don't put all my risk in the same accounts at the same time. I just take stabs at a couple of them at a time. And I get plenty of opportunities today. And I might have some more opportunities to finish the day off. Hopefully so. To grab some longs. But I'm out of bounds. This is normally where I stop trading. So I really don't have much to play off up in here other than just chill and wait and kind of see what happens going into tomorrow. But it's been a really nice, solid day. In these transitional markets where it's on the edge of being bearish, just take it a day at a time. Whoever was selling on Thursday and Friday, they may have a strategy to keep selling. They may say, let's sell most of our stuff these days and back off and let the bulls step back in and let's hit it again, selling more stuff. If some big groups out there are really liquidating, they usually liquidate in phases. So that's why topping is always a process. So be careful that this nice clean bull setup, one day we don't wake up, clobbering your bull pivots a second time. If there is some mass migration of money out of the stock market, it certainly doesn't happen in a single day. So I'm still going to be careful, waiting for, taking it one day at a time. I'm not like jumping in at the high now and saying, okay, I'm going to miss out on generational long if I miss out. I'm still buying these dips every day like I have been. It's been kind of nice. What's up, iDoc? I ate a big breakfast. I did. I had a huge breakfast. She's not bringing me lunch because iDoc is in Canada right now. She's on a trip. Hey, don't tell her that I don't eat my veggies. Okay, that's our secret. I sometimes eat veggies. Potatoes are a veggie, right? French fries are a veggie. All right. She's always watching. Yeah, she's making sure. Yeah, she's always watching. She's making sure that you guys are treating me right. That's what she's doing. That's why she's here. All right, I got 15 more minutes to play in the market. I'm not doing anything from here. I'm kind of going to sit out and relax. Potatoes are the best veggie. I would say so. I do like tomatoes as well. I'm a fan of tomatoes and squash, but bring back ketchup chips. I remember ketchup chips. That's why I had coffee, because iDoc is gone. Hey, trolling on me. Guys, come on. I thought we had a thing. You're not supposed to tattle on me. right? Tomato is a fruit. By the way, all vegetables are fruits. I'll teach you. Here's another cool fact. All vegetables are fruits for the most part. Vegetable is a word that's not really a real thing. A vegetable is like everything that grows on a plant is a fruit of the plant in biological terms. A fruit is something that grows from a flower that you can eat most of the fruits of a plant. Vegetable is just a word that chefs gave savory fruits because they aren't sweet. So vegetable is more of a marketing term than anything. But all vegetables are fruits. This is the way I learned this in the restaurant industry when I was a kid. So they used to be like as a fruit because there's seeds or no seeds, all edible flowering chunks, flower-born chunks of a plant that you can eat are fruits, technically speaking. This is the real answer. What's celery? I don't know. I don't know about celery. Doesn't celery grow off? Like I say, a fruit is something that comes out of a flower of a plant. It's a culinary distinction, as Evan had said. Like, this sounds smarter than what I said. It's a culinary distinction, not biological. Right. There we go. In a culinary sense, we label some things as vegetables with no real rule system about it. We call some things vegetables because we want to. And the debate is a tomato a fruit or not? What do you guys think? Biologically, a tomato is a fruit, but in the culinary sense, is it a fruit or vegetable? I don't know. I consider it a vegetable because I think when I think of a fruit, it's something I'm going to pick up and just like bite into it as a snack. And that's my culinary distinction of a fruit. And I don't think I ever like bite into the side of a tomato. Like a banana, dude, I'll dig right in, right? But then again, I don't bite into a lemon, so maybe that doesn't really work either. I don't know. How do you define a fruit? I don't bite into a grapefruit either. Maybe some of you guys do. I don't know. Like, I don't go in there and just chunk off of a piece of potato for a snack. I don't know. So eggplants are fruit based because they have a flower. Well, every fruit of a plant starts from a flower, right? It's a flower. The flower gets pollinated, then the thing pops out of the flower. I'll send you guys a pamphlet, The Birds and the Bees. If it has seeds. I think all of them are seeds, right? Based on taste. I think it's a chef's culinary distinction. Anything with a brown shirt is considered a fruit. You won. We found today's winner, guys. That's hilarious. When are you selling this course? You guys want my course on vegetables and fruits? $99.99. You're not going to miss out. Hurry now. Only 1,000 seats left. Get in before it closes. I'll teach you everything I know about fruits and vegetables. Guaranteed to up your performance in your salad game. You don't even know. Like 100%. Guru certified vegetable expert right here. All right. You just lost the argument about that. That's how you learned. I think I learned this because I worked in the restaurant industry when I was younger, and everybody I worked with were a bunch of snobby chefs that were like, actually, I'm like, oh, here we go. Which came first, the egg or the chick? Technically speaking, I think the egg had to have come first. I know this is always a question people ask, but it might have been an egg from another animal and then a chick came out of it. Because the chicken would have just like, well, let's just start laying eggs now. I don't know. All right, guys. All right. So I got maybe 10 minutes left. What do you guys have for me for the question? 2K watching the afternoon. Yeah, this is crazy. Wait, your chef buddy actually told you vegetables aren't technically real, all fruit? Dude, that's it. Like, I feel like you had the same conversation about this that I had with the chef. This is the same thing. They were like, bro, vegetables aren't even real. It's like just what we say. I think I had the same argument when I was in my teens working in restaurants. Cows are pooping eggs now? I don't know. That would actually be, are they big? Are they small? Like same size eggs? Bum, 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 bum. I always thought it was because there were seeds in it. That's what somebody told me. And then I ended up thinking that's, then somebody's like, actually, that's not correct. So, when does Matt go on holiday? I never really do. I don't really like to go on holidays. It's only sometimes. I mean, I do like to travel and go on holidays. Right now, I'm in business mode, man. Right now, I'm grinding. Did I get to my full part position? I'm waiting. No trades for me now. I'm totally waiting. Holidays are the best reward. I do sometimes. I'm in grind mode now. I have a grinding strategy for business at the moment. You don't take breaks when you're on a rocket to the moon. You'll eventually run out of fuel, and then you can take a break. Especially your rocket is named Scooter, LOL. What's the best thing to buy after you get a nice payout and put money aside for taxes? More accounts, right? So the idea is that if you are trying to build a buffer, you're not trying to buy things with your trading gains. You're trying to become a trader. You need to either fund a trading account yourself or save it as additional buffer so that you can buy accounts in case you blow up. That way you can turn trading into a self-sustaining business that pays for itself. That's rule number one. And then, as somebody said, strip club is the next place to go, I guess, for rule number two. Or snacks. Snacks are always a good thing to buy. Buffers can come later. Use the money you make making props after you pay your taxes as buffer to continue to press. The first goal is for you to actually be funding your trading journey with money that you make from your trading journey instead of money that you make from your job. That would be your first goal, to be smart about it. It's not like you get your first payout, it's time to buy a new car. Just pretend that you got a long grind to get ahead for, day trading, whatever. You ready for the next boot camp? We start on Monday. IDOC's watching. Did you say strip club? She's probably watching because I said strip club. She's like, when are we going? LOL. Don't got enough for the Lambo, sadly. Right. So my thought of the journey is pretty simple. It's once you start, you're going to have a lot of money going in at first, right? And then a little bit of money coming out. So ultimately, you're putting dollars into the system as a net. So the net is in, right? At some point, and the money that you put in is probably from your savings. Let's just put savings, whatever your income is or your savings, right? So this model is operating at a net loss. Your net is that you're pumping money into whatever the system is and getting a little bit out. As you get better, it starts to hopefully turn into something like this, where you put something in and you get a little bit more out because you do better. And therefore, the net is you left something over, right? And now you have net gain on the events. And then what you should do with your net gain, as I always tell people, is you just put it aside and build it up. Pretty soon, you're going to blow up these accounts probably. And then you've got money on the side to keep buying it with it. Therefore, when you can do that, you close this loop out that you never have to put in any extra cash from your savings, right? It's completely blocked off. And so the first goal, especially with prop trading, is to self-fuel the thing, and anything you make out of it is just to make this buffer bigger. Now, at some point, you can say, ooh, let's put this into my own real account. Now I'm ready for the show. Now I made 40K sitting here in this pile. Let me put 20 of it into a real account with 20 left over. If my real account goes bust and I lost the 20K, I've got 20K to chunk back into the machine to keep building my savings up and buffer again. So start to segment your money in a particular, again, I can't give you investment or trading advice. I'm not a financial advisor. This is prop firm stuff. So I guess it falls out of the jurisdiction of that. But in general, you want to be able to create a scenario where you're not putting money into a trading account, right? This is the ultimate goal of a trader. So treat all money you make, even as far into trading as years, as money you don't need to make to spend. That even to this day, 15 years later, the money I make trading isn't used on my lifestyle. Other things I do pay for my lifestyle. The money I make trading builds and builds and builds, and then I take chunks of it and invest in something, and chunks of it and invest in something. It's creating a self-sustaining growth ecosystem for wealth. So when you're like, I've made some money, what do I spend it on? Get in the mindset of you have a restaurant, you've been struggling, and finally one day it went viral. Some Instagram influencer came by, and all of a sudden you had 1,000 people more come that day than ever before, and you made all this extra money. What's your first thought? Ooh, let me go buy something with it. No, that's not going to last. Your next thought is, how do I leverage this money to make this event happen again? Ooh, with the extra money I made today, let me hire another influencer to come back out and another influencer to come back out, right? So make sure that you think like that, especially in prop trading. Any money you make, start to kind of think of it as money you don't need to spend. And you're working towards creating a thing that supports itself. Your first goal of business is to have your business break even, have your business fund itself. You're no longer putting money into the business. Trading is like a business. So fund yourself. And then as you start to build more income, if you can do that, if you have that ability, you're that far in your trading, then start to branch out into doing it on your own. And the prop system is always there as a fallback because you originally grinded out your first bankroll that way. It'll always be there for you to do it again, right? So that's a good strategy, I think. Create the empire for you and your family. Start with MyFundedFutures. There you go. That's a good saying. I like that. But yeah, I don't depend on let trading pay for trading. Yeah, your first goal is to let trading pay for trading. And then your next goal is, can you net some extra cash from that to do anything else with it? Whether you do want to buy a Lambo, or whether you do want to buy a house or pay off your mortgage, or whether you want to invest in other businesses and other things, whatever. But you need to get through multiple phases of, you need to be able to support your trading support itself first, and then try to get to the point where you have something left over. That's really a great strategy. Oh, I think I'm running out of time. I got 2 more minutes here. But yeah, I don't like, everything I make trading is never like, ooh, you know what? I need some money. Let me dip into my trading accounts. I need to get like 30 grand to buy something, or I need 50 grand to buy it. I'm never spending the money I make trading on anything other than investing in something that'll make more money. That ecosystem for me is just a wealth generating mechanism. If I have a bad month, there's money to keep going. If I have a good month, there's money to put into something else. And I think in general, trading is seen as an investment that's risky. I continue to use everything in an ecosystem to invest in other investments that are not as risky. And that's really what I do. Your best, support your lifestyle with your job or with whatever income you have, business you own or something. Trading is so random. You have good months, bad months. You really can't support yourself trading until you're so far ahead. You got more money you need to spend than you can. But getting started out, your job is to make it into a self-sustaining thing. Yes, sir. Learned so much good shit here. Thanks, man. Oh, fair. Appreciate it, man. I'm reading chat. See what you guys are saying. Yep. So that's a wrap. I think I'm gonna get out of here. My time is up, but thank you for tuning in. Like I said, I promise you guys a cool trading lesson every day. We talk about everything in the market, my sentiment, whatever's going on. Today we talk about position sizing, how to turn trading into a business, how to survive in the prop world and other things. But I'm out of here. This closes down the show. Thank you for tuning in to MyFunded TV all day. As usual, I will be live in the afternoons. I got my link up for you guys. You guys can hang out with us for the rest of the day if you'd like. We will all be there hanging out, goofing off, live trading, whatever. Here's the link for that. Head on over there. But thank you, mods. Thank you, producers. Thank you, hosts today. Thank you, Tom, that awesome segment before he stepped in. Thank you, MyFundedTV, for the 25 awesome donated scale accounts to the community. We really appreciate that. We appreciate the love from all you guys in the community. Thank you for being here for me and helping this channel grow and helping us grow. We love you. Thank you. I'm out. Bye-bye. We'll see y'all tomorrow.
Yeah. Charts scribbled like hieroglyphs, secrets in the mist. Candlesticks whisper, every wick got a twist. Fibonacci spiral, price dance in a trance. Pyramids of profits if you catch the right glance.
Inner circle moves, shadows on the screen. Trading on the edge, chasing that dream. Cipher in the candles, fortune in the haze. The cipher in the riddle, money through the maze.
Liquidity hunt, snipers in the dark. Stop loss.